ABN AMRO is being sold down. The government's stake in that bank is being sold down. And so we've seen that overnight. That's taking a step forward. They brought that shareholding down from 49 to 40% or so. And we've got Commerzbank in focus for another day, of course, looking to get further details on what exactly UniCredit intends here. We'll be tuning in for that all-shell conversation later, Guy.
Absolutely. Looking forward to that. The opening trade is almost upon us. We are anticipating a strong start here in Europe this Thursday morning. It is ECB day. We're going to focus on that a little bit later on, but let's focus on the equity story first of all. You are seeing some upside in the FTSE 100. We're up by 0.2%, 0.3%, but keep an eye on what is happening with iron ore, the miners. It's interesting talking about what is happening in that space, potentially further legs to the downside in some of the commodity spaces. So factor that into your FTSE thinking. The stock 600 is out of the gate. We're up by 0.5%. The FTSE 100 is now up over 1%. This is the catch-up trade to what we saw in the United States yesterday. The CAC 40's out of the gate up by 1.1%. So again, some decent gains. Waiting as ever for the DAX to open. We'll see how positively it opens. We're keeping a firm eye there on what is happening with the banking story. Critty, what are we seeing below the surface?
Well, let's start with that banking story, because right out of the gates, you are seeing some green on the screen when it comes to the banking sector, and that's going to be a crucial one. You're seeing that sector higher by 1.3%. That's an important one. Remember, the entire market is rallying, so how much of that is a response to the kind of light rules that we got on the capital requirements remains to be seen. But of course, you do have a major outperformance in the tech sector as well. That's going to be, Anna, a little bit of a read-through from yesterday.
Yes, just diving into the banking sector. We don't have an opening price on Commerzbank for another day, so that seems interesting and one to continue watching. The gains across the banking sector do seem to be not substantial, but pretty broad-based so far. And we do see a bit of upside for the French banks as well as the UK banks. So it's not as if the UK banks are standing out because of what we've heard around Basel today. The best performing sector is basic resources, and that's interesting because we've had some really interesting mood music around, well, more than mood music, around China. We just see the line crossing the Bloomberg terminal that China's CSI 300 index has closed at its lowest level since early 2019. Chinese growth concerns typically weigh on commodities, but that hasn't stopped a bit of a rebound at the margin in some of the commodity plays over the last 24 hours. Certainly through the Asia session, we saw some strength there, and perhaps that's filtering through into the European equity session as well, Guy.
It's interesting, Jake Lloyd-Smith on the M Live talking about another leg lower. Iron ore is due a fresh leg lower, so you wonder whether that's going to feature in their thinking around those basic resources. The movers are interesting. What you're basically seeing today is maybe some rotation out of Roche into Novo. Novo is a pretty strong performer. Keep an eye on that. As you can see, Roche is at the bottom of the screen. I need my eyesight checked.
Yep,
I can just about see that. There you go. So you've got that to factor into your thinking. So maybe some rotation within that. So Novo is rising on the back of that. The chips are looking fairly solid this morning, but as you say, the miners are also popping higher. So maybe a bit of rotation within the healthcare sector.
I think the breadth is important to notice here, because in our 50 underperformers, or bottom 50 performers, the underperformers, you still have 3 out of those 5 in the green here, Anna. So it really speaks to the idea that this is a fairly broad rally. The question is, does it stick into the close?
Yeah, absolutely. Let us talk about what is happening with European stocks then this morning. We caught up yesterday with Emmanuel Cao from Barclays, who identified Europe's exposure to the global economy as a key impediment to its recovery. We'll listen to what he had to say and then continue the conversation about the global growth story and how that plays out for Europe.
We're also struggling to see a strong case for Europe to outperform. I think the main story is about, look, Europe is a player on the cycle. If you believe in a soft landing, if you think the recovery is going to carry on into next year, we're going to have some mid-cycle rebound in growth next year because central banks are delivering some support to the economy. Europe is a very cheap option. Europe is a big player on China, so it's very hard to see European economy, European sentiment decoupling from China. You have this ongoing threat, which is coming from the US with the election.
Okay, a lot of thoughts there from Emmanuel Cove, Head of European Equity Strategy at Barclays. Let's get another perspective. Sebastian Redler, Head of European Equity Strategy at Bank of America Global Research. Sebastian, nice to see you as ever. Now, last time we talked to you, I think we talked to you about how you were negative on European equities, seeing some downside for the Stoxx 600, and I think that's still the case. But I think you've turned a bit more positive on this China angle. Can you give us a bit more detail on what you're thinking there?
So you already have you effectively have a very bifurcated narrative. On the one hand, global growth, very strong, risk premium globally extremely tight, therefore equity markets close to all-time highs. And then you've got the China plays like luxury mining, they're already beaten up. But crucially for us, we would take the other side of the narrative because we think there's still more pressure in Europe and the US from all this monetary tightening that you've done. And it's feed through into a weakening labor market. And of course, there's intense focus on the labor market. China is the only major region where you haven't tightened policy, where you've actually eased policy at the margin. So we expect the credit cycle to improve there. And that is a key driver of the economy. So we think there's still downside risk to the US, but relative to very bearish sentiment right now, upside risk to China.
Okay, that's interesting. And what's the timing like on that China call? Because you could have perhaps, you know, we've heard people talk positively about how cheap things are in China or how policy will come to the rescue, and then you hear sort of drip by drip policy initiatives from China, and it doesn't seem to be enough. And we just covered that line about the weakness in Chinese stocks as a result. What makes you think that the timing is now?
So effectively, you had very weak second quarter growth in China, weighing to some degree on the global angle. You had an extremely low PMI print in July, which already started to reverse in August. So we think you've seen the trough in the second quarter in terms of GDP, in terms of the PMI in July, and effectively you get a more, as I said, a more supportive credit contribution into the macro cycle. And then people are very worried about the housing market and the property sector, but of course that is very levered into the credit cycle. If you get more benign credit flows, it's easy for housing not to be such a drag on the overall picture.
Focusing in on Europe, I'm curious about where valuations suddenly make a weakening economy and a fiscally constrained region actually attractive. Where is that bar? Have we already crossed it?
I don't think so. You are currently at 13 times, 13.5 times. Your average valuations in terms of the 12-month forward P is 14 times. You're not obviously depressed in terms of valuations. If you look at the price level, you're close to all-time highs. Sometimes people are trying to make the case that there's some kind of depressed value that you want to pick up. With markets close to all-time highs, very hard to make that case. And the reason for this is that the European equity market has really decoupled from the domestic growth story. You had effectively a recession in Q4, you had a recession in the UK, didn't prevent cyclicals from versus defenses from rallying, didn't prevent the market from going to all-time highs, because you're so levered into the global growth story and you've benefited so much from the strong growth rebound in the US last year. And so I don't think anything is depressed here. The question rather is, I would turn it around and say, if we now see the slowdown in the labor market in the US, and of course we had a very interesting labor market report on Friday, I think you are vulnerable at these levels if that weakness in the US labor market is confirmed.
Vulnerable in the States or vulnerable in Europe?
European equities have tracked global risk premium, which are very tight because the US recovery has been so strong. So if the US recovery now falters, if the labor market rolls over, there will be a widening of global risk premium, and that makes European stocks at current levels very vulnerable.
Why is the DAX near record highs, given what's happening in Germany?
Because of exactly that phenomenon that I've just highlighted. You've decoupled. I mean,
but it's exposed to China.
It is exposed to China, but you have nonetheless caught the bid, effectively. So if you look at European equities, and the DAX effectively is a levered function of that, they track global risk premium very, very tightly. And I think if you're not aware of that angle, everything seems like a puzzle and a paradox.
Yeah, exactly.
But if you're aware that the main thing that drives European equities is the overall risk sentiment that is reflected in risk premium, such as the US high-yield credit spread, and you say, as long as credit spreads effectively are at rock bottom levels, asset prices will be strong. But if you get anything happening with the US labor market recovery, the first thing that happens is risk premium go from the bottom end of the range to the top end of the range, and then you see the fallout in terms of asset prices more generally.
I actually just want to... I was going to ask you a question about the luxury sector, but in terms of the beta of Europe to the US data, therefore, what is it?
So I would say, rule of thumb, high yield credit spread is at 300. The best it typically is 300.
Yeah.
So it's basically macro perfection priced into risk premium. If you get a hard landing, you go to 1,000 basis points.
Yeah.
From 300 to 1,000. Every 200 basis points increase takes 8% off global equities, but takes 12% off European equities. So you've got a beta of around 1.4.
So really high. So Europe is a high beta trade on US
Exactly.
credit spreads.
Yeah. So Europe is, in a global context, the cyclical play. It's got a lot of cyclicals, therefore higher beta to risk premium, and it's also the value play. So if bond yields rise, that is typically good for Europe's relative performance.
Yeah, that's the bit that confuses me. Yeah.
No, it's because basically value stocks outperform on a relative basis. Yeah. So Europe is cyclical and it's value. So what it really likes is tight risk premia and rising bond yields. What it really hates is widening risk premia, falling bond yields, and that's the scenario that we see going forward.
That's interesting. And thinking about things we get from the United States, I wonder about the impact of the election stateside in Europe. And yesterday we were having a really interesting conversation with Bani Baweja, who was saying that, and it took me a moment to get my head around it, he was saying that looking at the profitability that's priced into stocks globally, stocks in the United States this was, but looking at the tariffs that maybe the Trump administration wants to price in, he thinks that there are various parts of the global equity space that are basically pricing in a Trump win, even if that's not what, predictive models say, or there's a lot more nuance to people's expectations. What do you think what are markets telling you is priced in terms of elections?
So I think when we had this high point of the Trump probability winning after the assassination attempt, betting markets had him at 70%. Europe was strongly underperforming for about a month, and basically Biden looked very weak in the debate and so on. And you saw that the market effectively decided if Trump comes to power, you first of all have to look after your own security for the first time since the Second World War. Plus, you're going to be hit by all these tariffs. So Europe was clearly identified as a victim of a potential Trump presidency. That has gotten priced out again. And for now, because there is, first of all, little clarity on who's going to win, and then secondly, some haziness about the policy platform. Right now, after that was reversed, this move that I've just described, very little is priced. Markets are holding their breath. They haven't really engaged with the election. And so therefore, if you were now to get a Trump presidency, which is not likely, I think there would be more underperformance coming for Europe because you would be effectively hit by this double whammy of basically more defense spending and more tariffs to deal with.
You say a lack of policy clarity. I would argue it's the same on the Harris side as well. What is the Harris trade?
I don't think there's a clear... I think you have seen some economic policies to the left of Biden, but I think to simplify, I would say this is the continuity candidate. There is not going to be... This is the status quo that you'll be getting, maybe with some tweaks. And I can tell you from all our client conversation, we had a big macro dinner, for instance, yesterday. The delta, i.e. the shift, is really if Trump comes in. If you get Harris, you get basically business as usual, just continuing.
Can I just wrap up the conversation with a quick comment on what's happening with the cyclicals? LVMH topped out this year at 872. It's now trading at 614. It's near its lows, 607. Does that trade continue, or is it time to buy that trade? Just want to come back to the China angle.
Yeah.
That looks like a play on China.
Yeah.
If China's stabilizing, do I buy LVMH? Yeah. You've also got this line that you're worried about cyclicals continuing to decline.
Correct.
Which one of those applies best to LVMH?
In a way, I would say both. So we are more worried about the US labor market, as I've highlighted earlier, than about China. If the US labor market rolls over, and of course we're seeing a sharp slowdown now in hiring in the US, then cyclicals will underperform. But very importantly, we've got so much ambiguity and so much uncertainty where we're going. You want to have, even if you're defensively positioned, and of course that was a winning trade over the last couple of months, cyclicals have underperformed by 15%. You want to have some cyclical hedges. And these are the cyclicals that have already suffered a lot, that are already pricing a lot of negativity, and that would benefit if bond yields continue to decline. These are the quality and growth cyclicals that have underperformed. And for us, that's luxury and semis. So in a defensive portfolio, these are cyclical hedges that we like, where we're overweight because we think they've already priced a lot of the bad macro news.
Sebastian, nice to see you. Sebastian Regler, Head of European Equity Strategy, joining us from Bank of America Global Research. Talking of LVMH, let's show you how that stock price is performing this morning. This is the core six around Europe. Firm focus on what is happening in the pharmaceutical space this morning. You can see Novo Nordisk is up very nicely. Roche is softer. We'll find out the details of that in just a moment. But LVMH rallying quite decently as well. But it's the semi-sector where we're seeing the real gains. Look at ASML up very nicely this morning, up by 3.5%. Let's get some details as to what is happening in the single stock story. Here's Joe.
So there's a real focus on the large cap stocks today. As you mentioned there, Guy, in the Super 6, now Roche and Novo. These two stocks are actually the biggest movers on the entire Stock 600 on a points basis. So Roche leading the declines following news that their keenly anticipated obesity drug causes higher rates of sickness and nausea than expected, and that is really hammering that stock this morning. That is the biggest decline at the moment since around January. So if it stays that way, it will be the biggest loss in around 8 months. There's the banks as well, though. Now, these are the three stocks that JP Morgan is flagging as potential takeover targets. Obviously, the news yesterday of UniCredit potentially looking at Commerzbank with that stake purchase, but they also do highlight ABN AMRO and Banco BPM over in Italy. Bear in mind, we got that big stake sale today from the Dutch government as well, but those stocks gaining pretty impressive for Commerzbank, given it was up 17% yesterday, extending those gains once again. Then we'll look at some chip makers. Guy mentioned just a moment ago ASML, but the whole sector is higher now. This does appear just to be a bit of a read across from the US. The Philadelphia Semiconductor Index was up 4.9% in the US yesterday, and that is feeding through into BE Semi, Soitec, Ikestron, and ASM as well. All of those getting a bit of a rebound. Doesn't really seem to be any news driving that, but really a read across from the US. Then just a couple of corporate updates to finish on, both in the UK. Renishaw, now this is an engineer whose machines are used to assemble iPhones, so they're an Apple supplier. Got a pretty strong sales update out of them. We're up 1.5%. New iPhone coming out will be helpful for them. But going the other way, Fevertree drinks. We're not drinking enough gin and tonic in the UK, according to Fevertree. They say the UK is the weakest market at the moment. The US still doing pretty well. They love a G&T over there. Fevertree down 6% in London this morning.
I'm sure we can do something about that. Help them out with the gin and tonics. Joe Easton from our equities team, we thank you so much. Coming up on the program, we go right to where Joe started, Roche's disappointing study and why the latest findings on their obesity pill are causing concern for some investors. We're going to dive into the details next. This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Good
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Welcome back. You're watching the opening trade. We're nearly 19 minutes into the session, and as you can see, we see a lot of green on the screen. There are some exceptions to this, though. Roche shares are under a little bit of pressure this morning. This after a small study, and we're going to talk about the kind of where we are in this study process, has found that the company's closely watched experimental obesity pill has significant side effects. Nausea, vomiting, blood pressure issues. The results raise questions about whether this novel medicine can compete with the next generation, the current generation, of weight loss drugs. Sam Fazeli joins us around the table from Bloomberg Intelligence. We need a little bit of history here. So a few weeks ago, Roche shares, out of the blue, rockets. And the reason for this is we've got details of a phase 1 trial that seems to indicate positive things about this new obesity drug that they're talking about. Immediately after the show, I'm a little confused, and I come and find you. And you're like, what on earth are we doing? Why are we releasing phase 1 data? Talk us through why we don't release phase 1 data.
I mean, biotech companies do, Guy.
Yep.
You know, that's because that's all they've got, right?
Yep.
You know, that's what they live on. They have 1 drug, 2 drugs, and they have to tell the investors what's going on with those drugs. Pharma companies tend not to. Obviously, there's no rule, there's no law against it, but they tend not to because they're early data. This is a 4-week data set. And this is a world where that balance of efficacy and side effect is very, very nuanced, and you have to just spend quite a lot of effort. And if you listen to Novo and Lilly, etc., on their calls afterwards during the second quarter releases, they did say that you can't just take patient numbers of this size, small trial, and say, oh, I've got this efficacy. What do you pay? You pay the side effect profile cost. So
that's what we're seeing now.
That's what we're seeing now. The drug is good efficacy, but they need to work it out still. They need to get that balance right. And that's why you don't really push too hard on phase 1. I'm not saying they did push too hard, but I wouldn't have released that.
Right. And so this is what we're still learning about this class of drugs, is it, Sam? You know, what is the end product going to look like? You know, we've got injectables from a couple of places already, and here we've got a pill that seems to be, as you say, effective but has side effects. There are other things in the mix here when you're looking for the right, you know, way to treat this. The effect's got to be durable, and it's got to come at a low cost. And that's why people were looking at pills, I think, wasn't it? Because it was going to be cheaper and therefore more opportunity globally.
Yeah, as you know, there's a supply issue. So, demand is constantly outstripping supply. So if you have a small molecule drug that you can manufacture as a pill in little blisters, as we're all used to seeing, it logically should be easier. Now, manufacturing processes aren't always that easy. But so this would be a great thing to have. There are other companies trying to develop oral too. And it's also possible that you have to think about, do people want to keep injecting themselves ad infinitum? Because that's probably what we have to keep doing, taking these drugs. Switch to an oral, that's good. But they have an opportunity here to work it out. Roche is definitely not out of the picture. It's just was way too early.
Yeah. But now so much of the concentration is on side effects, as you point out. But is there a bar that they have to meet in terms of eliminating some of that, competing with the likes of Novo Nordisk? And in the obesity space, is that what it's coming down to, or is there something else?
Yeah, so that's one of the things. You need to balance that side effect and efficacy. And obviously, if you give less drug to reduce the side effect, you'll get less efficacy. It's the normal world of drugs.
Yeah.
And the other thing that people are very focused on, and apparently my colleague Michael Shah is at the conference where this data was presented, he said there's quite a buzz around this molecule that's related called amylin. And there are companies, Zealand Pharmaceuticals, I think we had the CEO interviewed recently, Lilly, Novo Nordisk, they've all got this kind of molecule too. It's all in the same area, same hormonal pathways. And that's the buzz because it gives you weight loss, comparable potentially, but less side effects. And it seems to reduce the impact on muscle loss, which you might see with these current drugs, with the current mechanisms. So that's where there's a little bit of buzz.
Just come back to the share price, and we'll get the team to put the one-year share price up again. We've basically almost round-tripped in terms of the initial burst of enthusiasm we saw when this phase 1 trial was first published. We are now pretty much unwinding that move. Where should we put Roche in terms of the universe of those developing weight loss drugs? How should we think about how Roche plugs into that? Are we back to where we started? Is that the correct way of thinking about it from a market point of view? Is it more competitive going forward because of the fact that it's got a pill? How should we think about Roche in terms of the competitive landscape?
Right, perfect question, because there's a whole host of other data sets from competitors or incumbents that are coming out in the next few 6 to 12 months. From oral pills to new drugs such as the combination of amylin and the current mechanism of action GLP-1, CagriSema from Novo Nordisk. That's shown some really interesting efficacy that suggests that the combined product is more than the sum of the two. Right. In terms of weight loss. So there's lots of that data coming out. You just have to put Roche where into the future compendium of drugs that will be out there for obesity as one of the potential players. No one's really going to be in a position yet to decide who is the winner. And maybe you don't need the winner because it's such a massive market.
Sam, thank you very much. Sam Fazeli from Bloomberg Intelligence with the latest on Roche and its part of that obesity drug market. Let's stay with the pharmaceutical sector. Bavarian Nordic shares are higher this morning after a study found a single smallpox vaccine dose is 58% effective in preventing Mpox infection. Let's get more from our colleague Janice Q, who's been following this story. Janice, good morning to you. So what does this study show then? Why is it important?
6% might not sound like a lot to everyone, but this is pretty effective. And the scientists who did the study have said that it really does show that the shot should be made available to communities that are at risk. The study was done in 2022 in Canada when there was a less virulent strain circulating globally. And with the more virulent strain and this outbreak that we're seeing in the Congo, vaccines have been a huge sticking point and a big talking point. And so this really just bolsters the move by health officials to get vaccines on the ground and get those shots into arms.
And the Bavarian Nordic CEO has said that a single shot has about 80% effectiveness, whereas these results are lower than that. Why the discrepancy there?
So rates of vaccination effectiveness do vary, but no trial has been done on this vaccine that is a randomized control trial, which is effectively the gold standard for clinical trials. And so in the absence of that randomized control trial, this is probably the closest thing. This trial matched to an unvaccinated population, and so they could see the difference quite clearly, and that could be why there's been this discrepancy between what the CEO has said and what this trial shows.
All right, Bloomberg's Janice Q joining us from Johannesburg this morning to break down some of that data. We thank you so much. Coming up on the program, we go right back to the macro. The ECB widely expected to lower borrowing costs today. Interest rates, the bond market, very much in focus on both sides of the Atlantic. Luckily for us, we've got Jennifer Barker from BNY Mellon. She's going to be joining us around the table in just a few minutes. Stick with us. This is Bloomberg.
Do you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics of the math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
A lot's happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Or other authorities.
Could face bigger challenges next.
It was going to keep reading World Cup. This is a 3
as the economic picture,
covering the intersections of Hollywood, Silicon Valley, and beyond.
Welcome back. This is the opening trade, 30 minutes into today's session in Europe, and we see some strength coming through. You can see in particular on the Xetra DAX. If we look at the sector breakdown, the technology sector is the best performer today, really picking up where the Nasdaq left off, I guess. The Nasdaq up by more than 2% in the session stateside yesterday, and that's perhaps setting the stage for these gains we see this morning. US futures then, Critty are up by 0.3% on E-minis and Nasdaq.
Yeah, the green on the screen on both sides of the Atlantic is really fascinating here because it's coming off, of course, the CPI data in the States. Perhaps the argument here is simply that there's a little bit more clarity. It, of course, comes ahead of the ECB decision today as well, where, again, we are expecting another cut from the bank. This is important to keep in mind because now that we're looking at a global easing cycle, how does this show up in the banks? How does this show up in bonds? We have the perfect guest to join us here this morning. Joining us now around the table, Jennifer Barker, Global Head of Treasury Services and Depository Receipts over at BNY Mellon. We thank you so much for joining the program. Look, we're talking a lot about this interest rate story and kind of this market plumbing story around the world. And I guess what I'd like to kind of get your insight on is how is it showing up post-COVID, post-pandemic, when we're seeing these interest rate changes happen far more quickly than they ever have before? From your vantage point, how does that show up?
Yeah, so we see it show up first of all, thank you for having me. So it's great to be here. So we see it show up in a couple of different ways. With the higher interest rates, we see clients demanding a couple of different things. First is they need better data and analytics to really understand how best to optimize their cash and how best to optimize where their money is at the right time. And the second is settlement cycles. And so it's not just payments, which is my area of expertise running treasury services for BNY, not just the payment settlement cycles that have shortened, but also other types of securities, T+1 that was launched earlier this year. So it's really helping them optimize that cycle, and it's really helping them understand where is their money around the globe to be able to settle those transactions exactly when they need it.
Well, let's expect. You said settlements. My ears immediately perked up because this is something we've covered on the show quite substantially, and that Europe has a little bit of kind of catching up to do when it comes to that clearing, et cetera. And yet, you also mentioned payments on the digital banking side as well. It almost feels like Europe is ahead of the States from a digital banking perspective. And I'm curious where, for a European audience, the work needs to be done, and if it's even being done.
Yeah, so I would say on the digitization front, you're right. Europe and Asia is ahead of the U.S. in the context of launching an instant payment system. But there are very common trends that we see around the world in terms of digitization. All of the market players are moving to they want to be 24/7, they want to access real-time data, and they want to digitize everything from end to end in terms of payment flows. And particularly in Europe, we see a lot of the banks want to invest in infrastructure. About 92% of the market players want to invest in more infrastructure. They want to send more cross-border payments. And two big themes we see are they want to do all these things, but it is expensive to be able to do these things around the globe and to be able to connect the myriad of payment systems to be able to do that. It's often cost prohibitive. And so they need help bringing all that together into a central, cohesive client experience. And so that's a common theme, particularly we see in Europe.
And so they're trying to do a lot. They're trying to change a lot. They're investing a lot, and things are moving more quickly than they were, Jennifer. And so I'm wondering what tools they turn to get that done. I mean, does AI play a role here in what these clients are doing day to day, what their employees have to do, and what they can leave to the machines?
Yeah, so a couple answers to that question. So first of all, they are turning to AI to help them do that. So AI can do a number of things. It can help their employees be more efficient. It can help their client-facing teams be more efficient so they can spend more time with their clients. It can help in their operations be more efficient. It can also help them, analytically understand and, optimize their clients' flows. But they also turn to providers like BNY because we are globally connected around the world. We build out all of the technology infrastructure so that our clients don't have to. We maintain it. We maintain all of the upgrades. And we bring all of that together through a single technology upgrade so that they can really focus on their clients and their strategy.
When you think about that AI journey, and this is a preoccupation for the markets as a whole, but each industry has its own experience. When you think about that AI journey, I mean, how much of that is already done? When you talk to clients, do they say, we have so much more we can do on this front, we can make this process 80% more effective? Or do they say, we've kind of done what we can? Where is the conversation?
I would say we are earlier in the journey, absolutely. I would say AI is a topic that people are starting to understand, and they're starting to develop the use cases around, and they see the application, particularly in the payment space, that I work on. But in terms of, launching that at scale, I would say we're in the early innings of that.
In terms of what's going to happen next, is scale going to be important? If you are a bank, we're spending our morning talking about banking consolidation in Europe, what's going to happen with UniCredit and Commerzbank and various other permutations around Europe. Does Europe need to have bigger banks in order to invest in a process that is unfolding rapidly? Does scale matter at this point?
Scale matters in banking for a variety of reasons, right?
Yep.
Because obviously from a regulatory perspective, because from all the technology upgrades, you have payment standards such as ISO 22 coming out, and then you have cyber and other resiliency. So scale is important because you have to keep pace with not only local payment upgrades but all around the world, because most banks service clients not just in their home market but in other markets as well. So scale is very important. But the good news is that banking providers don't have to do it all themselves, which is where partners like BNY come in to help them do that.
And in terms of the patchwork that is Europe, when you think about payments across Europe, is it easy? Is it difficult? How does it work? We talk about the need for a banking union. What does that look like? From a payments point of view, how much of a banking union do we already have?
Well, there are a variety of different ways to connect payments across Europe. And so I think really the problem that we're trying to solve is how do you make the technology interoperable?
Yep.
There will always be new ways to pay, right? And so there's the SWIFT system, there's the multiple payment systems you're referencing, there's the multiple instant payment systems, not only here in Europe, but around the world. And so ultimately, you talk about scale and technology, they have to be able to work together in a cost-effective manner to solve client needs. New payment systems will pop up, and we have to be able to do that.
So Jennifer, I think, and for our global audience, I think this is important to highlight that you represent BNY Mellon, which handles most of the clearing around transactions that come through and are approved through the New York Fed. And the reason I put this into context for our global audience is because you have a unique vantage point in terms of seeing the liquidity and seeing the positioning for banks around the world, corporations around the world. And I'm curious what, from the clients you're speaking to, what the liquidity concerns or perhaps lack of concern looks like, especially ahead of the U.S. election. We're talking a lot about the markets being cautious at the moment, given a lot can change going into the end of the year. Does that show up in the liquidity picture?
So you're absolutely right. We clear about $3 trillion worth of U.S. dollars every day. So we do clear a lot of payments. We don't see that as much because ultimately what clients want to be able to do is optimize their flows, and particularly around dollars. You know, as you look at rates and potentially rates coming down, you know, clients continue to position themselves to really make sure they've optimized their liquidity both within their companies and then across their entities across the world. And so whether they can access dollars locally or they have to access across borders, really optimizing dollars is really, really key to make sure they're earning interest on every single dollar that they have in turn.
So, and this is a comment that we're hearing from so many banks around the world and so many of our guests on the show is that liquidity concerns aren't showing up right now the way that maybe they have in the past. And part of that is going to be post-COVID, extra money sloshing in the system. But I'm also curious about what that red flag might look like. What do we need to see to say, oh, that makes me a little nervous?
Yeah, I think this is where, to your question on AI, this is where AI really helps us understand, you know, looking at client flows and looking where clients are, you know, where things are a little bit out of the ordinary. So as those things help us understand that, that's when we would work with our clients to really help them develop alternative strategies.
All right, Jennifer Barker, we'll leave the conversation there. We thank you so much for coming and visiting from the States, Global Head of Treasury Services and Depository Receipts over at BNY. In the meantime, Guy, we have some headlines crossing in the auto space.
Yeah, more headlines coming out of the German auto space that we need to pay attention to. It'll be relevant as well to what the ECB is thinking about today. VW and its unions, I'm imagining this is IG Metall, but don't quote me on that. To start, it is. There you go, Anna, telling me you can't quote me on this. To start wage negotiations on September the 25th. This is we see VW taking off the table some of the job guarantees that have existed for generations in this space.
Yes, and it's interesting. So they're bringing forward. They were due to go to talks with IG Metall in October, and they're bringing those forward because of everything that has happened, because of their plans, because of the stories we've been covering about the risks to some of their production facilities in Germany.
Yep, this is the EV transition works less well, and the strains of China and the impact on Europe continue. There's did you see the story this morning about the Chinese saying, don't build in places like Europe, key technology.
Exactly. So assemble some of this key technology in China and then send it to Europe already assembled was the...
Not sure that's going to work on the tariff front.
Instruction. No, exactly. Tariffs get quite picky about all of that detail. Let us talk about what is coming up later in programming. In the next hour, we'll be speaking exclusively. Francine Lacroix will be speaking to UniCredit's Andrea Orchel about his plans for Commerzbank. What exactly does he intend? Our reporting suggests that he does want to take over the whole business. Let's hear from him, shall we? That conversation coming up in the 9 o'clock UK hour. Up next, we'll discuss the potential for that deal to go ahead then. This is Bloomberg.
What about quantum computing? People talk about that. Is that something that I should be looking at investing in?
I've made a lot of mistakes, betting on these new technologies like AR, VR turns out to be not so big, 3D printing turns out to be not so big. My estimate is $100 trillion was invested in today's dollar in the PC, CPU-based infrastructure. All this is going to get ripped out to put $100 trillion or more in our GPU-based infrastructure. In that sort of quantum of numbers, I feel that the quantum computing is going to be very small.
You always are worried about, I presume, geopolitical events. So are there some geopolitical events you're worried about right now?
Yes. I don't know why, but for some reason I love thinking about black swans, and at the office everybody thinks I'm weird because I'm always thinking about what can go wrong. But underpinning the AI is the chips. And the chips, despite the CHIP Act, which I think was a good idea for the US, I still think like 80% or so of the capex of TSM is in Taiwan. And so at the leading edge, a lot of capacity is in one very small area. Forget that it's just in China, it's in a very small area. I think that's very risky.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Welcome back. 43 minutes into the equity market session. We are bid pretty much across the board. This is a reaction to yesterday's session where we saw the States afternoon basically delivering quite significant upside on the markets there. That needed to be priced in this morning, and that's basically what we are doing right now. Moving forward, we are now going to focus on what is happening with the ECB. It is going to be the central story, I think, in the afternoon. We're widely expecting a 25 basis point depot rate cut today. That will take us to 3.5%, a prelude, some would argue, maybe for what we're going to see out of the Fed. A headline crossing within the last few minutes. I can't actually see the research in my inbox, but we'll get to that in just a moment. The Goldman Sachs revising its ECB and Bank of England forecast. It now sees a faster rate of cuts from both of those two European central banks. Let's go to Frankfurt now. Lizzie Burden is standing by inside now the ECB. She's standing by the big euro sign, which I always love. Takes me back to my days of standing outside the ECB at a different location. Lizzie, walk us through the meeting today. What are we going to be expecting? We've got Goldman Sachs now upping its estimates for what we are going to see after this meeting. What are we going to hear from Christine Lagarde?
Exactly. I wouldn't expect Goldman to be upping its forecast for today. No one sees a jumbo cut from the ECB today. But the reason that a quarter point cut is on the table is because you've got inflation risks receding and concerns mounting about the growth outlook. So it's unanimously expected by economists, fully priced by markets, and it puts the focus on the October meeting. And this will be the focus, I think, of the questions at the press conference. This is where the divergence lies between markets and economists. Can they squeeze in another cut before the end of the year, or do they stick to the quarterly cadence of quarter point cuts all the way to the middle of 2025? In any case, I would expect Christine Lagarde to be pretty coy here, sticking to the data dependence language, not pre-committing to a particular rate path, not just because of the data, but also because of the divergence on the Governing Council over where the neutral rate lies. But if she does pour cold water on an October cut, you could see a bit of a euro bounce.
And just so we don't get confused, Lizzie, there are a number of rates that sometimes move on these days. And today there is some expectation that we see the refinancing and the marginal lending rates moving, and perhaps by 60 basis points. But that's going to be a sort of sidebar story, isn't it? Tell us what we need to know about that.
Exactly. It's a bit of a red herring, this. Don't get excited about a 60 basis point cut. It's not expected to immediately move markets or impact the economy. It's more about the plumbing. So it's kind of a hangover from the era of negative rates. They couldn't cut these two other rates deeply into sub-zero territory. And back in March, you had this decision on the operational framework to shrink the spread between the three of them. And today we will see that happening. But really, it's more about oiling the wheels behind the scenes as the ECB shrinks its balance sheet.
Lizzie, walk us through kind of the key players here. Are we seeing consensus when it comes to that Governing Council, or are we seeing a little bit of pushback?
So So you are seeing more of a consensus when it comes to today's meeting in terms of cutting by a quarter point. But as you look ahead, this is where you get the divergence. There is a range of views as to where the neutral rate lies. Could it be at 3% or down to 2%? And you've even had policymakers saying that as we get towards that neutral rate, policymaking is going to get more difficult. Not that it's easy in the near term, but the reason that you have this disparity of views is because of the risks to the inflation outlook versus the risks to growth. And it'll be interesting as well at the press conference to see what Christine Lagarde emphasises and whether the reaction function is shifting towards growth. Again, you could see that encouraging the dovishness of traders, and you can see that already in that updated Goldman forecast.
Lizzie, great stuff. Thank you very much indeed. Lizzie Burden joining us from inside the ECB. We will bring you that press conference a little bit later on. Some great coverage coming up from our team surrounding Christine Lagarde, the decision and the press conference. I wonder if she'll be asked about cross-border banking consolidation within that press conference. It's certainly a subject that we've spent a lot of time over the last few hours talking about and thinking about. UniCredit, Commerzbank. We've got lots of questions. Let's try and get some answers. We're not going to get the answers just yet, but I have to say, we're joined around the table now by Tom Metcalfe and Francine Lacroix. Francine is very soon going to be talking to Mr. Orchel.
I'm excited.
I'm excited. I am really excited.
I think we should take a bet, actually, on how many times Christine Lagarde gets asked about cross-border consolidation. I'd say 6 times.
Okay, I will. I think that's quite a punchy bet, but I'll take the other side of it and maybe suggest that she goes a little less than that. But I think I am fascinated by it this morning because I want to know, what's the key question for Orchel this morning? What do you ask him?
So the key question, I think, Tom and I probably agree on this, is whether he wants a full takeover. So this is how he's done it, right? He had a 4.5% stake in Commerzbank. And then yesterday there was this news that he took 5% from the German government. What's his intention? So at the moment, what I'm hearing from the UniCredit camp is that this is an option. So they haven't gone, nuclear, we want to take over, we have the money, we'll do anything it takes to have it. But it's a good fit. We've had many interviews with Andrea Orchel where he says he wants to be the European bank or the bank for Europeans. We know that he has cash. We know that he wants bigger. We know that he wants cross-border. He's a deal maker. So it's almost a given, but we haven't heard it from him. So let's see what he says.
Yeah, he's a deal maker, and he's long believed that Europe needs bigger banks, hasn't he, Fran? He's said that many times. If the European banking scene is going to, go toe-to-toe with the American giants and Chinese financial services, then it needs to have bigger banks, combined banks. So we know that that's broadly his intention, isn't it?
Yeah, and we know, look, he wants to compete, and when he competes, he wants to win. So it's true, he always has, I think, on the back of the mind that he wants to beat Wall Street. It's interesting that actually this happens in the week where Draghi also talked about a banking union. Whereas that, every time you speak to Orchel, he brings it up, saying we need to be better, Europe is falling behind, we need to compete and go stronger. But I'm not sure the noises from Germany are very supportive of that.
If Lagarde is asked lots of times about banking M&A, maybe she can just refer all the questions to Mario Draghi and say, I'm sure my predecessor will love to take those questions, could he?
Tom, let's dive in on that. How believable is this now? Does this create some sort of more credibility to the idea of a banking union or cross-border consolidation now that Orchel is suspected to make this move?
Yeah, I think any time there's stuff like this in the ether, it moves things forward. And it really will be fascinating to hear what Andrea Orchel says to Francine in terms of, what is his posture, what is his sort of, official line on this. And, selfishly as well, I'd just love to hear, the mechanics of this. He's a legendary deal maker, so does he go out and does he actually need sort of external advice? Does UniCredit need sort of, the classic banking lineup you normally see?
Because he's done lots of deals before, hasn't he?
He's done every deal.
He did. So Ubo Vereinsbank, he advised on that. Anna was pointing out earlier on as well.
Well, courtesy of Tom's team.
Well, okay, fair enough, but I'll give you the credit. He did. It was ABN AMRO
and RBS.
What was now NatWest. So he knows how this works.
He does. So the concern, and maybe we'll put that to him. Not all of them were good. There's a lot of pushback in Germany on Vereinsbank and the fact that actually UniCredit, this was over 20 years ago, bought it and then dismantled it. Yeah. I think maybe he'll want a chance to say, well, look at the share. Now it's not doing too badly. But then it's a bit like being a doctor. I mean, if you're a great doctor, but you have to treat your own children, they say, please stay away, move away from the patient. So I don't know whether, Orchel has, I think, this idea of he wants something big because he thinks it's the right thing. I don't know whether doing it himself, not as an advisor, will make him do the right decisions.
It's interesting thinking about this as an option, Tom, because as we were discussing in the last hour, you wonder where the other big names in European banking are right now, what they're doing this morning. They'll be tuning into your interview, no doubt, at 9:30 UK time, to listen to Orchel and what his intentions are for Commerzbank, because there could be others. There could be other banking names around Europe that think, hang on a second, if we're going to do this cross-border M&A thing, and if we're going to do it for real, we want to play a part.
Yeah, exactly. It's a momentum thing, it's an atmosphere thing. So, yeah, guarantee all the boardrooms will be watching this scenario very, very closely, whether they're interested in doing anything or not. And I think even people who are saying publicly now, oh, no, we're very focused on organic growth, for example, if this does go through, or, you know, there's some kind of movement here, that sort of changes the landscape somewhat, and it might get people thinking differently. And, you know, that's the biggest thing. Yes, huge hurdles, regulatory, political, but if there's a real appetite, deals can get done.
If they wanted to, they would, I feel like is the message here. There's a quote hitting the inboxes here from JP Morgan saying that this could potentially kickstart a European M&A cycle. And Tom, I'm curious how much of this is a longer-term play from Orchel, or how much of this is really just good timing from a crunch in the German budget, a little bit of opening up in the capital markets. Is this just really lucky with timing? Yeah, no, I think from UniCredit's perspective, you know, they were always looking at this for years. It was always been, you know, one of these sort of perennial rumours. And look, things just lined up perfectly. The German government, you know, put out these shares in such a way that UniCredit could see a way of buying big. And we understand that, you know, it was that sort of the government almost tipping their hand that prompted Orchel to buy, you know, quietly in the market, sort of an equivalent stake, about 4.5%.
But there are other stakes around Europe, aren't there, that he could potentially be looking at as well? If it's not this deal, is it another deal?
I mean, it could be, but we've heard it from Intesa. We've heard it also from some of the French banks. I mean, a lot of these banks are sitting on cash that wants to be used for possible M&A. I think a lot will depend on how the trade unions actually behave. And if I know anything about Andrea Orchel, is that he doesn't want to lose money on this deal. So suddenly, if it gets blocked for like 9 months because it depends on job losses, on what he has to keep or not, and we sometimes underestimate. You know, Germany is very unionized. Germany will be organized. So it'll be, I think, crucial also to understand from him if he got the blessing from the German government ahead of this.
Well, the shares popped a bit yesterday, didn't they? So maybe he was pleased with that. Tom Metcalf, thank you very much. And Francine Lacroix, of course. She'll be back with The Pulse. Catch Francine's exclusive interview with the UniCredit CEO, Andrea Orchel. That is at 9:30 a.m. UK time, so that's coming up in just over half an hour's time. A quick delve into some of the other items on our trading agenda this trading day. We've got an IEA oil report coming at 9, so that's in around 5 minutes' time. And given the pressure we've seen on oil prices, until the last couple of days, that is, where we perhaps are more focused on hurricanes,
Hurricane Francine.
Yes, I was just thinking that, yeah.
How convenient.
There's more than one, I promise you.
So that's in focus. We've also got an ECB meeting. We've talked a lot about that, of course, and what the expectations are. We are expecting to see a second cut in this cycle from the ECB. We get some jobs data, but it's the initial jobless variety. Claims data later on, and a few earnings coming through as well.
Yeah, Kroger, Adobe, looking forward to that one. It is the ECB. We're going to be focusing on that a little bit later on. What are we going to see in terms of guidance, I think, is going to be critical from here. I think it's interesting that Goldman Sachs has also upgraded its estimates for what the Bank of England is going to be doing.
Yeah, and we'll get the detail on that, because the market is moving in that direction anyway, isn't it? Thinking about more cuts from the BOE. We saw that price in further cuts yesterday.
Well, that'll be good news for Rachel Reeves, but the latest data in terms of the GDP numbers coming out of the UK certainly signals that we're seeing a flatlining of growth at the moment. So maybe the Bank of England does need to accelerate.
Although Bloomberg Economics casting that as just removing that risk of overheating in the UK economy. So
overheating?
Yeah.
That's what it feels like.
Ironic.
With the labour market as tight as it is, or the risk of going back into a sort of inflationary period, more inflationary period.
Absolutely. We should just point out that as we're speaking more about the UK, we are actually getting a little bit of the bank read-through when we're talking about those capital requirements. This is where we kicked off the show. It's kind of where I think we should end the show as well, is that it looks like a less than expected move in terms of that 1% increase in capital requirements. The expectation was about 3%. They're competing with the states and the EU on something like 9%. It's a pretty broad rally. Some of that's a catch-up to what's happening or what happened in the last 24 hours in the States. But the banks are outperforming right next to the likes of ASML, SAP, etc.
The big bank bosses are going to Downing Street today. They're there primarily, as we heard earlier, to talk about what is happening with the Basel story, but I suspect they'll also be lobbying heavily against tax rises that we're anticipating from the Treasury in the next budget. So that wraps the show up, but make sure you stay tuned to Bloomberg. The opening trade may be over, but the Pulse is next. Francine has an interview with Andrea Ocel. Looking forward to that conversation. The highlights of the morning. This is Bloomberg.
Countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers. You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal?
Are markets too optimistic?
How do you worry about the things that are outside your control?
How does the current fighting completely stop?
I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Or other authorities.
Could face bigger challenges next.
It was going to keep rain World Cup. This is a 3
as the economic picture.
covering the intersections of Hollywood, Silicon Valley, and beyond.
Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Decision day for the ECB. The central bank is expected to cut rates again, but remain tight-lipped on future action. Bloomberg has learned that Commerzbank is bolstering its defensive strategy as it gears up for a potential takeover approach by UniCredit. We'll be joined exclusively by Andrea Ocel, the UniCredit chief executive, at 9:30 a.m. Plus, the Bank of England says bank capital rules are virtually unchanged after the latest tweaks, becoming the latest jurisdiction to make sweeping revisions to a package agreed to globally almost 7 years ago. So we have a packed show. First thing is first, let's take a look at the European markets map. Now, a lot of the focus, of course, will be on the ECB and Christine Lagarde a little bit later on. There are definitely a bit more risk on these global markets. Now, stocks rallied again, tracking some of the gains that we saw in Asia, and that's really on the back of a tech-fueled rebound that spread globally. So risk appetite returning. Again, some of the largest technology companies in the world has been getting a bit of a boost, and you can see the FTSE almost gaining 1%, the DAX 1.1% higher, and then the CAC 40 in France is about 0.8% higher. S&P futures practically unchanged. Euro dollar 1106. Let's see if Christine Lagarde really gives us some clues on the path ahead, and then straight after that, the focus will be on what the Fed does next week. Brent crude 71.52. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, we're just getting the IEA report on oil, International Energy Agency, saying that global oil demand growth is slowing sharply as China's economy cools, pushing prices to a 3-year low. Well, to talk about all of this and much more, the way forward for prices, the way forward for demand, and the like, let's get straight to our exclusive interview with Toril Bozzoni, head of oil markets at the International Energy Agency. Toril, as always, thank you so much for joining us. There's a lot going on, of course, that we need to talk about, but you basically forecast for non-OPEC plus supply are robust for now. Are you worried that the low oil prices will, of course, hurt supply growth? How long would you expect these prices to stay and impact the rest of the market?
Good morning, and thank you for that question. Yes, so with prices at the current level, there's a lot of concern about the drivers for that and the slowing demand growth. But as you say, we are expecting non-OPEC supply growth of about 1.5 million barrels a day this year and next, and the U.S. being the biggest contributor to growth, but joined by Brazil, Guyana, Canada. So this American quartet, these 4 countries, adding more than 1 million barrels a day of supply. Of course, the concern is the shale patch, most responsive to prices, that if prices dip and stay at these lower levels, activity will slow in the United States. But that's not something that we're seeing at the moment. We would really have to see lower prices sustained for some time to see that impacting activity levels.
Toril, does the slowdown actually make you think that peak demand could arrive even sooner than expected?
So the numbers that we forecast now, we're expecting oil demand growth globally to grow by about 900,000 barrels a day in 2024. And this is in line with our expectations since we first published our 2024 growth forecast more than a year ago. Oil demand growth is returning to normal levels after the post-pandemic surge. But we are seeing slower growth in China as the economy is cooling, but also as electric vehicles and efficiency gains eat into demand for road fuels and for aviation. And it's confirming our view, as we put that we expect a peak or a plateau in oil demand for the end of this decade. For the time being, if that would be move ahead, it's too early to see. But we feel confident that moving forward, we see slower oil demand growth than we have seen in the past.
Do you think it's time, given all that's happening at the moment, for OPEC Plus to concede that its output cuts are just not working and therefore increase supplies?
Of course, at the moment, we also have significant outages in Libya. Production has been taken offline, so that's something to watch very carefully with and how that evolves over the coming months. But it's for OPEC. I'm sure that OPEC are also watching these indicators very closely, and they will adjust production as needed moving forward.
I mean, the drop, and you mentioned the Libyan output, the drop in Libyan output seems to be fairly mild at the moment. Do you expect that to decrease further in coming months?
We're hopeful that there will different factions in Libya will come to a resolution and agreement so they can restore production and exports. For the time being, our current assumption is that production will gradually increase over the course of September and October. But of course, this is something that we would have to watch and see.
Has a plunge in oil prices, do you think, Toril, been excessive?
Of course. We're seeing the market focus is moving from the third quarter when we had very tight crude markets in particular. Global crude oil stocks declined by more than 70 million barrels in July, and we see continued declines in August. So the market has been tight, physical market has been tight, but we're seeing product stocks increasing as demand is weak. So there's definitely weakness in the product market and demand. But now the focus is moving to the fourth quarter and to 2025, where in the fourth quarter we're expecting, barring any prolonged outages in Libya, we're expecting market to be relatively balanced. And in 2025, we're looking at significant surplus in the oil market as oil demand growth continues to slow, and with robust increases from non-OPEC production, even given the current production cuts from OPEC, we can see a significant surplus in the market evolve next year, and that's what the market is focusing on.
Toril, overall, why do you think your, the demand forecast is so much lower than others in the industry? What are you seeing that others aren't?
We're seeing, we have the firm data, actual data for the first 6 months of the year and preliminary data for July and August. And we're seeing that the first half of this year, global oil demand growth grew by 800,000 barrels a day. That's compared to more than 2 million barrels a day in the first half of 2023. So the data corroborates the slowdown in oil demand as we have expected for quite some time. Mobility indicators also confirms that the post-pandemic rebound in mobility in China and elsewhere has run its course. So we're returning to more normal rate of growth, and our projections for this year, they're in line with the relatively subdued expectations for global GDP growth of 3%. It's in line. So, and are we seeing now that other forecasters out there are adjusting their forecast downwards month after month and coming closer in line to our own expectations.
Toril, as always, thank you so much for joining us. Toril Buzzoni, they're head of oil markets at the International Energy Agency. Now, coming up is an interest rate cut in the bag for the euro area. We're live from Frankfurt ahead of today's ECB decision. And then a little bit later, we'll also be speaking with Andrea Orcel, UniCredit's chief executive officer, about his plans for a Commerzbank deal. That's an exclusive interview. It's at 9:30 a.m. UK time. And this is Bloomberg.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry. And
crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. A lot's happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything.
Now, the European Central Bank is widely expected to cut its key deposit rate by a quarter point today to 3.5% in a prelude to the Fed's first move next week, leaving a focus on the rate path ahead. For a preview, Lizzie Burden joins us now from Frankfurt. So, Lizzie, where's the focus going to be today? I guess what happens next?
Exactly, because today's quarter-point cut seems like a no-brainer. It's fully priced by markets, unanimously expected by economists, and it comes back to this busy summer of data where inflation's been receding and the growth risks are mounting. So, as you say, the focus very much on whether they can squeeze in an October cut before sticking to this quarterly pace of quarter-point cuts all the way to this time next year, leaving the key rate at 2.5%. I wouldn't expect Christine Lagarde to give too many clues. I expect her to use the language of data dependence and saying that she's not pre-committing to a particular rate path, not just because of the data, but also because of the divergence of views on the Governing Council about the where the neutral rate lies. But if she does pour cold water on an October cut, you may see a bit of a bounce in the euro. There'll be clues perhaps in the forecasts if they give a haircut to the 2024 growth outlook after that weaker than initially reported second quarter growth number. And actually, you could see the traders' enthusiasm for cuts being encouraged depending on where that forecast ends up.
So there could be a 60 basis point twist, two bigger cut rates, or two bigger rate cuts as well. How much does that matter to markets?
Yeah, this is kind of a red herring because it's obviously not the usual size of a rate cut, but it's to do with the plumbing. So it's a legacy of the negative rates era, these three rates that are charged to banks for taking money from the ECB diverging because the other two rates couldn't be dropped into sub-zero territory like the main lending rate. And actually, because of the decision back in March on the operational framework, they're going to shrink the spread between them. So it's nothing to worry about, they say. It's just to smooth the process of shrinking the balance sheet. And the expectation is there won't be an immediate reaction in markets or an immediate impact on the economy.
Lizzie, thanks so much. Lizzie Burden there in Frankfurt. And don't miss our coverage of that ECB policy decision, 1:15 p.m. UK time, and President Lagarde's, of course, news conference half an hour later. Now, traders have cemented their bets on only a quarter-point Fed rate cut after yesterday's resilient inflation data reinforced a measured course of action. So we'll discuss the environment in the banking sector as we build up to our exclusive interview with the UniCredit Chief Executive, Andrea Orcel. So for more, let's bring in our panel, Christina Kino, Managing Editor of Bloomberg Markets today, and Paul Davies from Bloomberg Opinion. Paul, I loved your opinion piece. We'll talk about a second about a banking union and what this means on a week where maybe it could kickstart some M&A in Europe. But there's an obsession, if not a fascination, of course, with the bond market, ahead of every kind of data and then the post-mortem after the data. What do you tell us about the way that the bond markets have behaved on the back of U.S. data?
Well, Francine, it looks like a lot of bond investors eating some humble pie today because we did see that those rate cut bets being paired after that inflation data surprised a little bit to the upside, particularly on that core number. But really the big takeaway from the mix of inflation data and employment data we've seen in the U.S. recently is that the U.S. economy is not imminently heading into recession. It's more consistent with the soft landing scenario. And so we have seen a lot of those bond gains give them back, and also those bets being paired because, coming into this data, bond markets were trading like the U.S. economy was melting down massively. That simply isn't the case right now, Francine.
The thing is that everything's being muddled, right? Because if you look at household, corporate sectors, they haven't fully felt the bite of any tightening yet. So you could have a situation where they're stimulating an economy that has not yet cooled sufficiently.
Absolutely, Francine. And I think that's also part of the consideration by the Federal Reserve, and that's why they don't want to overdo this, because there is that transmission mechanism question, and really how much of that has already been transported into households. I mean, household demand in the U.S. still incredibly strong and very resilient. If you could just see by the summer spending patterns that we've seen this year alone and in the last couple of years. And so, it's really a question of, are households kind of feeling that pushback in higher rates from previously, or are they still really very much resilient and therefore, propping up an economy and again supporting that idea that it's really more of a soft landing rather than a recession environment.
So this is the economic backdrop, and there's a lot going on with European banks, and you had a great opinion piece basically talking about Mario Draghi and the fact that he could also be helping, thanks to this competition report, Andrea Orcel achieve his goal of being cross-border pan-European.
Yeah, that's right. So obviously we've had, UniCredit doing the surprise deal to take a chunk of
Commerzbank stock this week. And yeah, we also had the Mario Draghi competitiveness report, and there was a lovely, very interesting kind of smart idea buried in there, which not a lot of people have picked up on, whereby he's trying to come up with a sort of a shortcut to the sort of the banking union that we've been trying to get done in Europe for a very, very long time, with lots of political hurdles sort of, in the way of it. And his idea is essentially just to kind of do a quick sort of minimal version of this just for the biggest banks who really do cross-border business. And when it comes to what UniCredit wants to do with Commerzbank, on the one hand, there's a good sort of consolidation story within Germany that they can do with this deal. But if we get sort of better conditions for proper cross-border banking within Europe, then it will make the whole deal seem even more interesting.
But Paul, so what does that look like? I mean, when we talk about a banking union, sometimes we talk about it kind of, as a thought or a policy. I mean, this makes a huge difference to the balance sheet of banks, right, where they can book things and move things around.
Yeah, exactly. It's whether you can, essentially it comes down to whether you can use funding from one country, so German deposits, to lending in higher yielding environments where more credit might be needed. So the classic example is maybe German deposits funding lending in, I don't know, Italy or Spain or something like this. And that's the core of the problem. Everybody, especially in Northern Europe, has always been worried about what happens if their deposits are used to fund ultimately bad loans in markets that they look down upon or worried about the state of. And the key problem has always been, how do we come up with a common deposit insurance scheme so that, everybody's money is ultimately safe to a degree? And I think the idea here is you just do a smaller version of that just for the biggest banks who, remember, are kind of more capitalized, much more closely regulated, and will have a kind of, a tighter supervision, a tighter resolution regime as well. And so, I mean, there's still going to be huge political obstacles, right? It's still a really difficult thing to get across the line, but it's slightly easier, maybe.
I was going to ask you about the political obstacles, because when Draghi, publishes his very lengthy competition report, Germany kind of came out and saying, look, I'm not sure about this. But what you're talking about is, for example, Draghi calling for a European securities regulator, right, like the U.S. SEC, to harmonize some of the rules. Is it something that Germany or others would push back against, or is that acceptable?
I think the idea of a single securities regulator is probably the easiest one to do. I mean, there's still kind of issues there. I mean, it gets very knotty and specific about, local bankruptcy regimes and how investors are treated and so on and so forth. And actually there's always kind of tax differences and that sort of thing. So there's a lot of kind of like very dull, very kind of particular stuff involved in this. But politically, that's significantly easier than common European borrowing and fiscal, structures, or, common deposit insurance schemes.
Yeah, which, I mean, shock and horror for a lot of countries when you mention that. But then, of course, policy is set for European states. Goldman also revised their ECB and BOE calls because they now see a faster pace of rate cuts. What does that mean for what we're watching out for the ECB today?
Yeah, I mean, that just raises the stakes, doesn't it, Francine? Again, you have the likes of Goldman and others in the market having these expectations that the ECB in particular would deliver those back-to-back rate cuts for the remainder of the year. Same for the Bank of England. And so as far as the ECB is concerned today, I think it really will boil down to the communication from Christine Lagarde. Is she going to push back against those market rate cut bets that are still priced in? What is she going to say about them? I mean, we know, of course, that she's going to want optionality. She's not going to want to be definitive one way or another and stress the ECB's data dependence. But, of course, traders will want to read between the lines, right? And so what will Christine Lagarde provide us between the lines? Is it a message of, yes, maybe potentially more easing than expected, or actually hold off on those rate cut bets?
Christine and Paul, thank you so much for joining us. Christina Aquino, Managing Editor for Bloomberg Markets Today, and Paul Davies from Bloomberg Opinion. Now, don't forget, in a few minutes, our exclusive interview with the UniCredit Chief Executive about the lender's move to up its stake in Commerzbank. But coming up, deal makers in China are finding themselves in the crosshairs of authorities. At least 3 investment bankers have been detained since August. We'll bring you that story next, and this is Bloomberg.
Fixed Income Fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Now, China is turning up the heat on its army of 8,700 investment bankers. At least 3 top executives from different securities firms have been detained by Chinese authorities since August, sending a chill through the industry. So let's get more from Bloomberg's Tom McKenzie. Tom, thank you so much for joining us. I mean, this feels like an escalation, or it feels significant, is it?
The financial industry in China has faced a double whammy. One was Xi Jinping's common prosperity, where they saw pay cuts, so around 25% pay cuts, but also cuts to their bonuses, cuts to expenses. They have to fly cattle class, can't do premier, can't do first class, can't stay in nice hotels. That's all happened. Now they are being scrutinized by the anti-corruption regulators. So that's what's changed. But again, it's a double whammy because they've already faced those pressures in terms of pay cuts. Now they're being scrutinized. So just since the month of August, you've had 3 prominent bankers, top-ranked bankers, who have been detained by the authorities. One actually fled overseas and then was repatriated to much fanfare in the state media. So it is symbolic, again, of the pressure on this sector and the desire by regulators to weed out what they see is corruption. But the timing, of course, is important, given that the CSI 300, we know the equity markets in China are underwater. They could be facing their 4th straight year, unprecedented, of losses across Chinese equities. So it just sends another cool chill across that sector. Regulators will say, look, this is important. We need to clear up this sector and make sure we have brokerages and securities that are match fit to take on their Western competitors.
All right, Tom, thanks so much. Tom McKenzie there with the very latest, of course, on what's happening in China. Now, coming up, our exclusive conversation with the UniCredit Chief Executive, Andrea Urcel, after a big week for the European banking giant. That's up next, and this is Bloomberg.
think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching The Close. Welcome to Balance of Power.
This is Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacroix here in London, and these are your top stories. Decision day for the ECB. The central bank is expected to cut rates again, but remain tight-lipped on future action. Bloomberg has learned that Commerzbank is bolstering its defensive strategy as it gears up for a potential takeover approach by UniCredit. We'll be joined shortly exclusively by Andrea Orcel, the UniCredit chief executive. Plus, the Bank of England says bank capital rules are virtually unchanged after the latest tweaks, becoming the latest jurisdiction to make sweeping revisions to a package agreed to globally almost 7 years ago. So let's go straight to our top story, and the Italian banking giant UniCredit has built a 9% stake in Commerzbank, raising the possibility of a takeover that could reshape Europe's banking landscape. I'm delighted to be joined exclusively shortly by the UniCredit chief executive, Andrea Orcel from Milan. I think we'll get to him in just a second. Just to recap what we know so far, it has been certainly the talk of the town. We're just joined also by Paul Davies to discuss exactly what this means, as the banking union that actually Mario Draghi had put in place is something that really could make a difference to players such as UniCredit and others that in the past had said they really want to cater globally for Europe. So I am delighted now to be joined by Andrea Orcel from Milan. Also welcome to listeners on Bloomberg Radio to this conversation. Andrea, so good to speak to you. I know you've had, frankly, a crazy day yesterday and probably a crazy week. You have a 9% stake now in Commerzbank. Why did you buy this stake?
Oh, hello, Francine, and thank you. Why did we buy the stake? I don't think that should have surprised anybody. For a long time, we were clear on our strategy with respect to external growth and in which market, what kind of partners. And we didn't execute because we said that the opportunity was not there, and most importantly, the terms were not there. As a result of the German government deciding to reduce its stake in Commerzbank, we participated in a transparent process, and we were selected to buy the stake, and now we're here. So fundamentally, the opportunity arose, the terms were correct, and we thought it was something completely consistent with what we have guided for a long time.
What's the purpose of your move? Is a Commerzbank takeover your ultimate goal?
Well, ultimately, at the moment, I would put it a little bit differently. We are Commerzbank's largest private shareholders. We have 9%. And we are private shareholders that knows very well how much value can be created in running banks, not only because of what we've done at UniCredit, but also because of what we've done at HVB. And therefore, we have a lot of confidence in the value that Commerzbank can still create even before one considered any combination. And we're very clear on that. I think the management has done a good job till now. We think that they can accelerate that job, transform further, and achieve much greater results than they have so far. And on that basis, we've made an investment that is already within our metrics. We're transparently engaging on having a discussion on how we can add more value, or Commerzbank can create more value than it has done today, like any other investor. If they do, and when they do, we will be very happy with that. Conversation about an M&A or further combination are on top, and given that we're now an investor, we can engage constructively as to whether we all want to create something more than just the value that can be created by Commerzbank standalone.
But what's the rationality for a merger with Commerzbank? And if you speak to analysts, there are many. And is that the golden El Dorado? Would that be ideal if everything falls into place?
Well, I think that if you set aside for a second what Commerzbank can achieve independently, which I think it's a lot, which is why we have no downside in our investors, in our investment, I think. The ultimate goal is what everybody talks about. Europe needs stronger banks. Europe needs cross-border. Europe needs banks that are capable to support its industry and the development of Europe so that we are an economic bloc that can hold its own against the US and China. And for us, it is only partially a cross-border move. It is a cross-border move from someone that is the third bank in Germany, and a bank that has already demonstrated what can be done in Germany, because we're at the moment running at more than 20% return on tangible equity, at 13% in Germany, which is honestly more than double what the German franchise of Commerzbank is delivering at the moment. We have an operational efficiency cost-income ratio, which is almost 20 points better. And we have consistently been growing the top line more than most of the other banks in Germany. So we believe in Germany. We think that there is space, given the fragmentation of the market, to add further value by consolidating. I do think that that is not only our view, it's the view of almost everyone. And therefore, if there are the basis to do that constructively and to strengthen what we can provide the German economy and Europe, then that is a great move for UniCredit that believes in supporting Europe should do.
You've already applied to go past 10%. Are you planning to buy the next stake that the German government will sell? And would that be the full stake?
Well, I think what we said is we want the flexibility. Flexibility because as a private investor at the moment, we may go up, we may go down, and we may combine. All the options are on the table, and they will be the result of whatever comes out on a very transparent and open engagement, given that now we're public, and it's very simple to engage with all the stakeholders and see if the basis for a combination is there. And if it's not, and it is the basis for sponsoring or propelling further Commerzbank in delivering an accelerated transformation, then we will have delivered a lot of value for our shareholders as well. So I think that flexibility is because beyond 9.9, we cannot increase the stake unless we ask for authorization first. There is the possibility that the government sells down further. We would be interested at the right terms. There is the possibility that we buy in the open market, or there is the possibility we do nothing. But unless we ask for the authorization first, we don't have that flexibility.
Andrea, I was going to ask, how did you build up the 4% stake before the purchase from the government? And actually, had you spoken to the government ahead of all of this?
Well, I think I would say two things. First of all, if we have not moved for a long time, and we have not moved in any of our markets, with the exception of Romania for some time, is because the opportunity was not there. What does it mean? It means that when you go, not only in your market, but especially in a market that is not where you originate from, basically you need support from the local institutions. So we have always entertained a dialogue with regulators, institutions, and counterparts in Germany. Until today, we felt the foundation or the basis to go any further were not there. when during the summer, the rumors intensified that the German government may consider an early sell down, we took the decision to start building on the stake. Also, there was relatively uneasiness in the market, and the prices at which we could build it were quite attractive. And we felt, like we do today, that there was, in any scenario, value to be created. Then, when the government actually decided to do it, and we were part of the investors that they called to buy their stake, we made an offer. The offer was accepted in full, and we moved from 4.5% to 9% in one go. So that's a little bit the steps that we have taken. I would have thought all the relevant stakeholders were well aware of what we were doing, and we would not have moved otherwise.
So after your move, German government officials said that purchase actually caught Germany's government off guard. Labor unions urged Germany to try and stop from more shares being sold to you. We know that the Commerzbank Executive Board is also trying to prop up some kind of defense strategy. Do you worry about this? Have you spoken to them since?
Well, look, I worry and I don't worry. I mean, from my standpoint, I look at facts. We bought the 4.5% stake from the German government itself. And when we bought it, the German government was well aware we had another 4.5% stake. So implicitly, they were at worst neutral on us building the stake to 9. And we have been known and are known in Germany, given that it is more than a decade that we are in Germany with the third largest bank in the country. So honestly, I do think we've done that transparently and constructively, and we would not have moved had we been told otherwise. With respect to other points of view, I would say that obviously since 2021, Bank has undergone a significant transformation. But I would point you to, if you ever saw negative expressions or negative statement from the Workers' Council of HVB, I don't think you have, as you don't have in the group as a whole. Our culture is to balance all stakeholders. Our culture is we may disagree, but we try to lend a solution that is in the interest of everybody. Because we don't think we can win by brutalizing one stakeholder or one shareholder against another. So that has been very successful for us. And at HVB, I think we have created massive value and growth and hired quite a lot of people of young age on the basis of pursuing exactly that culture and that strategy. So I don't think that our approach to workers' councils or to our people or to our stakeholder is let's say, antagonizing or aggressive. Usually we go for compromises and a constructive agreement with them.
Andrea, just a final question, because I know you have to go. Would you be, would UniCredit do an all-cash deal? Is there anything that's off the table now? And do you have a deadline by which you want to either move forward or move on?
No, I think like everything else, and I think, Francine, we've demonstrated that in the last 3 years, we're very patient. We're a patient investor. We're a patient management team, which core objective is improving UniCredit. Through UniCredit Unlocked, we've done what many people thought was not going to be able to be done. We're very excited about the next 3 years. Most of the value that we can still create is there. If we, with this move that allows us to have an open engagement with all the parties, we're able to create more value, either by significantly increasing the value of the stake that we have taken, because Commerzbank will increase value, or by doing something else. Time will tell, but we have no rush.
Andrea, everyone this morning says you're the best deal maker out there. Who do you turn for advice? Anyone? It must be difficult advising Andrea Ortel.
No, or it might be very easy because we are very disciplined with our parameters. So we have not hired banks, and the reason for that is not because of the advice or lack of advice. It's because at the moment we considered ourselves having made an investment that is constructive and that is aligned with all the other shareholders of Commerzbank. How can we get more value out of a franchise that has great potential?
Andrea, as always, thank you so much for joining us. That was the UniCredit Chief Executive, Andrea Orcel, joining us for that exclusive conversation. Now, coming up, lots to go over from that interview. We'll take a little bit more time to go through Europe's biggest banking story. That's with our panel of experts next, and this is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
DOJ or other authorities
could face bigger challenges next.
Fed was going to keep rate World Cup. This is a three
as the economic picture
covering the intersections of Hollywood, Silicon Valley.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry. And
crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Well, moments ago, we spoke to Andrea Orcel about this 9% stake in Commerzbank. We started by asking him what his intention was longer term with Commerzbank. This is what he said.
Why did we buy the stake? I don't think that should have surprised anybody. For a long time, we were clear on our strategy with respect to external growth and in which market, what kind of partners. And we didn't execute because we said that the opportunity was not there, and most importantly, the terms were not there. As a result of the German government deciding to reduce its stake in Commerzbank, we participated in a transparent process, and we were selected to buy the stake, and now we're here.
Well, let's talk more about banking. Paul Davies from Bloomberg Opinion joins us, and also Tom Metcalf, EMEA Finance Managing Editor. I mean, Andrea Orcel was on great form. This was like almost him at his best, trying to explain what he's doing, trying to play the transparent card, saying, look, we don't really want to go hostile. What did you make of, what he's trying to portray?
Yeah, I thought it was, a bit of a masterclass, actually. Look, he's basically left every option on the table. Made it sound like it's the most natural thing in the world to come in and buy 9% of a bank in Italy. The thing I would draw out is, that was a very clear sign that, look, they are interested in increasing their stake. Obviously, he caveated that we could drop our stake, we could just sit on it, we're very patient. But, that was, as explicit as you can get in this kind of situation, that if the opportunity is right, if the numbers add up, and obviously if they have the support from various stakeholders, UniCredit, there's no, I guess, limit to their aspiration here.
What's your take, Paul? I mean, again, he didn't make it sound like it was the most natural thing, but I guess he's a pragmatic banker. He's a deal maker. So I guess he won't pay any price, and he probably won't hang around forever.
Yeah, I mean, I guess, he wants everybody to believe that
this works for him in any form. You know, he can sit on this stake and that will reach their return hurdles, you know, that he wants to make for the bank with the shareholders' money already. I thought it was very interesting that he said, you know, he likes the bank already, he thinks it's already doing very well. I mean, it's recovered a lot in terms of valuation and so on, and that he likes the management, but he obviously really wants to influence what they do and, you know, how they run the business. You know, he wants to engage in talks with them and so on and so forth. The management is also about to change anyway. The CEO is going to be leaving, so it'd be interesting to know what his views were on that. But yeah, ultimately, ultimately, it seems like he really does want to buy the whole thing, but he's got to kind of, you know, pretend that it still works for him, whether he does or he doesn't. And the really interesting thing he said about it is, you know, he sees absolutely no downside to this investment as it is, which is quite a brave thing to say, given the history of German banking. But yeah.
When you look, Tom, I mean, are we expecting others actually to come in? Is Commerzbank that attractive, or will the German government just step in and try and push this out of the way?
Yeah, no, look, I mean, there is some analysis out there. Might there be a white knight? It's hard to see right now. None of the big, obvious, you know, players, you know, BNP Paribas, for example, they already got their current, they're trying to absorb an investment manager. So I think it's hard to see a natural fit, but this is exactly the kind of process that suddenly, you know, everything changes, right, after this. So who knows? And I found it interesting, the Labour representative on Commerzbank's board is out there today going, we want Commerzbank to stay independent, but if it can't, we'd much rather the French buy it than the Italians. So, you know, it's fascinating.
Which is a strange thing to say, isn't it?
Yes,
I mean, is that because of Hypervereinsbank and what happened like 20 years ago?
There's a little bit of that, and I think, you know, in terms of what the representative was saying, is like there's just a better cultural fit. We understand, you know, Paris better than we understand Milan. But again, I would agree, that's not the kind of thing you expect one day after this happens.
I mean, what happens next?
Well, I mean, you know, to pick up on what Tom was saying, the one bank that will definitely be running around and working out what the hell they ought to do about this is going to be Deutsche Bank, right? It's like, do they want, you know, somebody else to be as big or bigger than them in Germany and have, you know, that kind of power in the market? So, you know, they'll have to think, you know, very, you know, consider very deeply what they want to do in this situation. Although they've obviously had, you know, a long and very difficult process trying to absorb, you know, Postbank within Germany, so it'll be tricky for them as well. But, you know, what happens next? You know, I guess the first thing has got to be, you know, ECB authority, regulatory clearance for UniCredit to go above 9.9% to give them that flexibility that Andre Ortel was talking about there. And then we'll see if he starts buying more shares in the open market or is like banging on the door for the German government to sell the rest.
All right. Well, thank you both for joining us. Paul Davies from Bloomberg Opinion and Tom Metcalf, EMEA Finance Managing Editor. Now, this is, I believe, a Bloomberg scoop. Again, we stay on M&A, and the family behind the luxury brand Chanel and the billionaire heiress of L'Oréal have bought, we understand, a stake in the fashion label The Row. This was founded by the Olsen twins, the Wertheimer brothers, via their family office Moose Partners, and Françoise Bettencourt Meyer's family vehicle, Tetis Investments, have bought this minority stake in the fashion brand. Now, this is an interesting brand because it really epitomizes and defines quiet luxury. I don't know if it's a huge stake. We understand that The Row is valued at about $1 million overall. So this is just the latest on The Row. Interesting to see some of the more independent brands actually being invested in by some of the bigger, of course, the bigger billionaires, I would say, in France. Now, the debate between Kamala Harris and Donald Trump attracted an audience of more than 67 million U.S. viewers on major TV networks, beating numbers for June's showdown between Trump and President Biden. Meanwhile, Trump says he's not inclined to have another debate with Vice President Harris, but left the door open to a potential second contest if it's hosted by either NBC or Fox News. Right, on to other things. And the new UK government has been given more details on its plans for reforming the rental market, including banning no-fault evictions and preventing landlords from raising rents more than once a year. This comes as data from property portal Zoopla says rent inflation has passed its peak. Now, Greystar manages and operates more than $320 billion of real estate assets across the world and is one of the biggest rental housing landlords in several European countries. Now, the company is opening a new London office and European headquarters this week, and delighted to be joined by the chairman and chief executive, Bob Faith. Bob, thank you so much for joining us.
Absolutely. I'm delighted to be here.
You're excited about the UK and opportunities here.
Absolutely. Absolutely. UK and Europe is a big part of our future, and we're really excited about that.
Is that because it's cheap, or is that because there's really growth momentum?
Well, there's a lot of opportunity. I mean, let's face it. I mean, every great city in the world, there's a housing shortage. And, you know, when you're a long-term investor in rental housing like we are, that creates long-term opportunities. And so we're going where those long-term opportunities are.
But talk to me a little bit about actually what the government here is saying. We'll build houses. We're going to do this. We're going to reform planning. Do you believe that? Does that change again how you look at the UK market?
Well, I would say that fundamentally we're pro-housing, and so we're working with the government to try and help them understand, you know, what it's going to take in order to, you know, solve the supply problem that is out there. And I think this government is serious about trying to solve the supply problem, and that's very good for our industry.
How concerned are you by data actually showing, for example, that, you know, there's a drop-off in international student visas being granted in the UK? Does that stabilize longer term?
You know, I'd say it stabilizes longer term, but again, it gets back to there is fundamentally a housing shortage, whether you're a student or whether you're, you know, a young renter. And so little blips, you know, a GDP monthly change or, you know, things like that, that doesn't change our long-term outlook. That, you know, what we're mostly, our returns are driven by, you know, that supply and demand imbalance on the ground.
It seems that, you know, certainly houses in the UK keep on getting more expensive. So do you accept that actually the people that are renting is because they have no choice? And does that change the dynamic between renters and landlords?
Well, at the end of the day, I mean, rental rates are naturally capped by wage growth, you know, and people's ability to pay. And so this isn't, when you're a long-term investor, you're not really looking for, you know, a trade or a year-to-year, you know, kind of windfall, you know, pop in rents. You know that over time rents have to go up with inflation, just like your expenses are going to go up with inflation. And so I think that's what attracts institutional capital to this space. And institutional capital is really important to get into this space to solve the supply problem. And that's something that we haven't seen in the UK and Britain the way we have in the US. In the US, 40% of the rental housing is owned by institutional. It's in kind of this build-to-rent format. That's 3% in the UK. That's what the huge opportunity is, to really bring institutional capital in to help solve this problem.
But, Bob, at the same time, and we've been waiting for these higher rates actually to filter through some of the more distressed assets.
Yes.
Right? Is that fair? Is that coming?
You know, it's interesting. The rental housing space, you know, operating fundamentals haven't really fallen off a cliff. I mean, so you are seeing capital distress, you know, and I think you've seen new supply because the cost of capital has gone up because of those interest rate increases. You know, but as opposed to perhaps office or something else where the operating fundamentals are also deteriorating in addition to the cost of capital, you're not seeing that in rental housing.
So are you more comfortable now that the market has actually bottomed?
Yeah, I really do feel like it has bottomed. I think as we see interest rates, you know, start to come back, that cost of capital, you're going to start to see more development. I mean, really what happened with interest rates going up, you saw the new supply pipeline really slow down, which just made the supply and demand, you know, imbalance even worse.
Okay, and Bob, so the good news is you're going to be in London more often.
The good news will be in a lot more often. That's right. We have about 1,000 people in the UK and Europe, grown from one person in a Starbucks 10 years ago when we first started here, and we're super excited to keep growing.
Well, I'm excited for the next interview. Bob, thank you so much for joining us. Bob Faith there.
Look forward to being back.
And Chief Executive for Greystar. Up next, Bloomberg Brief, Danny Berger and Manus Krani in New York, and this is Bloomberg.
I want to buy a computer, but I want to have AI in my computer. I want to be really up to date. Do you have AI in your computers yet?
No, not yet, but is coming soon. And we think this is going to be one of the largest transformations in the PC industry in decades. What will be possible starting this summer is to run large language models in AI PCs, which means that what today all of us are doing in the cloud, where you use any of the applications that you can, you will be able to do it locally. And what this means, which is why we think this is important, is it will be much better from a cost perspective, because running models in the cloud is expensive. It will be better from a security perspective, because you will be able to use the model with your own data locally without having to upload your data to the cloud, and you will be able to do it anywhere in the world. And also for applications where speed is important, where latency is important, you will be able to do it locally much faster. For example, in gaming, where the game needs any resource the computer have, it will be a much better model. So it's going to be a big change starting this summer.
At the same price, too?
Slightly higher price, but if we look at the increase of price versus the increase of value, not comparable.
Countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Good morning from our global headquarters in New York. I'm Menace Rennie alongside Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Countdown to the ECB. Rate cuts expected, but just how guarded will the guidance be? A banking crackdown yet again. China detains top investment bankers and asks others to hand in their passports. And a fresh cash injection. OpenAI to seek billions from investors, boosting the firm's value to $150 billion. Good morning, Manus.
Danny, good morning. The 50 basis point rate cut might have been knocked off the table, and that actually was taken quite well by equities, up over 1%. NVIDIA, it was the tech market that really sort of brought a tailwind to the market. So 50 basis points off the table. Methodic, slow process. Good news for the equity market, not so much for the bond market. Twos ratcheted by 9 basis points. So this bond market had perhaps a little bit overextended itself on the pace and trajectory of rate cuts. $30 billion worth. Our 30-year paper comes to the market today. We're counting down to the ECB. Goldman Sachs have just cut their neutral rate. We're flat at the moment. 110 is where we stand. So it seems as if there was relief in the equity market on the jumbo cut going and disappointment in the bond market. Danny, good morning.
Good morning, Manus. Even so, with the equity market doing okay, it didn't seem to start out that way. It was down 1.6%. It reverses to up as much as 1%. We're in this environment now where we're almost having cycles within one day. This from Bespoke. The last time the NASDAQ was down 1% and finished the day up over 1% was October of 2022. But man, it's back at that time, it was the bear market low. So this thing kind of tends to happen when you have regime shifts.
Yeah, and it not just that, but I think yesterday was one of those days where it really was fill or kill for the bond market, which is we needed the data to fill the order, to deliver the 50 basis point cut. We just didn't get dovish enough data for us. And that is where, you know, the equity market breathed a sigh of relief. No 50 basis points, so we're not in crisis.
I mean, at first it seems like crisis, but maybe there also just
growth
is this
growth scare.
Well, I mean, there's this idea of like if The inflation risks have abated, which is what yesterday's data. I mean, it did show, even though it was a little bit hotter, why mess around with 25? Why not go 50? Maybe it's not the economy that's moving the Fed to go 25, but just precedent and this idea that they want to move slow and carefully because it helps with their credibility and for cycles to come.
So it's going to be doubly interesting then today with where Lagarde's guidance goes. It is ECB day. The assumption is 25 basis points. Another cut. They've come back from the beaches. They'll go for 25 basis points, but what will the guidance be?
Yeah, and Europe's economy, by all accounts, is much weaker than the U.S. Growth looks anemic. Germany is facing VW plants shutting down. They can't agree on EVs. Draghi's calling for more spending. And yet we're just talking about 25, and we're uncertain where they go after that.
Yeah, the wages numbers have come down, and that's possibly a big element for the ECB. But let's talk about Ludovic Sobran. He's over at Allianz. He's looking past the ECB and weighing in on the Fed's decision next week, writing this. We expect 3 consecutive 25 basis point cuts in September, November, and December 2024, as the Fed balances out a softening of the labor market and a still resilient economy, followed by another 5 rate cuts in the first half of next year, taking us to 3.5% by July 2025. He joins us now. Ludo, good to see you this morning. We'll come back to your neutral call in just a moment. The CPI yesterday snuffed out the 50 basis point cut. The market still sees 140 basis points of cuts by the start of next year. Are jumbo cuts just delayed and not denied?
I personally think jumbo cuts are not warranted. You know, why would you use 50 basis cuts when you are in the midst of an election and anything could be seen as a political move, when you still have some pressure points on the overheating risks of the economy, especially on the labor markets? And to be fair, you have plenty of time between now and mid-July to go to a terminal rate of 3.5. So for me, we ruled out the jumbo cuts very early on. I think it was part of one of these, market testing the waters a bit. But yes, the question will be, if there is at one point the downside risk to the soft landing narrative, I think the Fed won't hesitate either. That's certainly sure, because remember, 25 is a very critical year when it comes to the real estate sector, when it comes to private equity, when it comes to a lot of these private assets that have been suffering a lot all through this year.
Ludovic, Jan Hatzius over at Goldman does agree with you, says that it should be 25 basis points. Yesterday only solidified that, but said that the market is overthinking the ability or the likelihood that the Fed has to respond to weaker data, and instead is not discounting enough the odds that the Fed cuts 25 and then has to stop because of an inflationary spike or just strong growth in general. Ludo, do you think that is a risk, that the market's discounting that the Fed cuts 25 and has to pause in its cutting cycle?
Of course. I mean, again, we talked about that, I think, last time. In our scenario, there is still a flip of a coin between Kamala Harris and Donald Trump. If Donald Trump were to be reelected to the U.S., he's very inflationary. And so I think that would cause the Fed to stop, right? And that is the loosening cycle, that is. So for us, for example, initially we thought, okay, the next FOMC is 3 days after the election. That would be anyhow a pause, because we know it's going to be a contested election no matter who wins, right? So we were a bit in the camp that maybe they should front load. And I think that's what the market is getting to grasp with, and that's why they tested this 50 bits. Now it looks, maybe because of the polls also, that there's going to be a very gradual loosening, which is really what the US needs today. This is the forward guidance 101. This is getting away from data dependency, which was really a mess when it comes to how markets reacted to this. Look at the bond volatility. And to me, I think that's why it's switching. The odds are going back to something much more orderly than trying to get something through, because indeed, were Trump to be elected, there is a risk of inflation picking up again very strongly in 2025 in the US, right? So now what is out there is at least 75 basis points till the end of the year. And then, 25 is the big question mark. For us, it is these 5 rate cuts that Marcus showed, but it is really a question mark, because Trump could actually bring back tariff inflation, labor inflation, and certainly also the devaluation of the dollar is a big issue when you think about how much import inflation could bring to the US. So that's what markets don't know much about, because nobody knows who's going to win this election.
So you lay out the board of risk very, very clearly. But if we take that forward, you talk about an orderly, progressive cutting cycle, which will be interrupted pretty much either way for you. What does that do to the bullish positioning in this bond market, because this bond market has really hung its hat very much on the bullish side?
It's very interesting because I think the bond market has been regime switching almost every 3 weeks since the beginning of the year, and we've seen very bearish moments and we've seen very bullish moments. I tend to be on the bull side now for the bond market. So I think now the big question everybody should have in mind is what does a big yield curve disinversion means, especially for stocks and for bonds. I tend to be long bond. We looked at the past episodes of US yield curve disinversion without a financial crisis or with a mild recession, and people tend to be very, pro-equity. I think this is a bit of a mistake because usually there are corrections along the way. I think we need to be long bond, and this is something that is, the right positioning right now if you look at what market is expecting.
Ludo, we have to talk about the ECB decision. I think some people would be forgiven to ignore it somewhat today. They're expected to go 25, but the European economy looks anemic in terms of growth. Germany is struggling to keep its head above water. China isn't lending it any support. But you still have the hawk saying that an inflation uptick is a risk. Are we going to get any guidance whatsoever from Christine Lagarde with those two very clearly opposing camps?
It is indeed a catch-22 for the ECB, but mostly because we are in fiscal season. And as you know, from France to Italy to Poland to, there are, Poland is not in the year, but these are countries that are it's a very interesting moment for fiscal policy and consolidation. We've seen the Germans showing the way, including their response to the Draghi report, right? So I think the ECB has to cut this week. They may pause and cut again once, and then come in with a series of cuts in 25 to reach 2.5 by middle of next year. But they have to be gradual because they don't want to give in too much. They want to also get a bit of, reserve or get a bit of something in their, dry powder type of, because we are concerned, all of us. The momentum seems to be okay-ish in Europe because of real wage growth. But 25 is a big question mark, especially on the German economy, which is again growing zero, but also on the uncertainty on a lot of political landscapes from France to Italy to Spain. And so I think the ECB cannot yield in to the pressure of saving the day too early when there are a lot of signals that need to come from Berlin, from Paris. And I think that's where they need to be apolitical. And so that's everybody's looking at how they're going to handle the soft patch. The numbers are again looking slightly brighter towards the end of the year, but structurally we have this slow agony risk that Draghi mentioned very vividly during his press conference for the Draghi report.
Ludo, I love that phrasing. They can't save the day too early. We're going to get that decision in just over 3 hours' time. Ludo, we always appreciate it. Ludovic Saban of Allianz. Manis, let's get some of the other top stories that are trending on the terminal this morning. OpenAI is in talks to raise another $6.5 billion in equity financing from investors. That would put them at a valuation of $150 billion, a significant jump than what they were at earlier this year when the company's tender offer put them at $86 billion. This all now puts OpenAI among the 100 most valuable companies in the world.
Norfolk Southern has fired the CEO, Alan Shaw. The decision comes after an investigation found he violated company policies by engaging in a consensual relationship with the chief legal officer. The CFO, Mark George, will be appointed as the CEO and will join the board.
Commerce Bank's executive board is reviewing its defense strategy as it prepares for potential takeover approach by UniCredit. The German bank, which surprised by the Italian bank's disclosure of a 9% stake, is taking the precautionary move ahead of its engagement with the Italian rival.
Coming up on the show, Beijing ramping up its crackdown on the banking sector, detaining several investment bankers. More on the story.
And HSBC's Dara Meyer not seeing much upside for the dollar. He's going to join us later this hour on Bloomberg Brief.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Wednesday, the Fed decides.
I know we're all obsessed about what the Fed may or may not do on September 18th.
25.50, that doesn't matter so much.
We're being very measured where maybe other central banks aren't.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
We have made no decisions about future meetings, and that includes the September meeting.
At this point, the Fed is leaving it open.
It's going to be up to Chairman Powell.
Tune in to Bloomberg Surveillance, the Fed decides, starting at 1:30 p.m. Eastern.
This is Bloomberg Brief. Danny Berger, Manish Cranny in New York. China is tightening its grip on its financial sector, detaining and taking passports of investment bankers. For more on this, let's get to Bloomberg's Jill Desis in Hong Kong. Jill, before it was China saying, curb any pay cuts, rein in belt tightening. This seems like quite the escalation to take passports and detain bankers. Why?
Yeah, that's right, Danny. So as you mentioned there, I mean, this has really been going on for the past few years, this sort of broader anti-graft austerity measures that China has really taken in regards to the financial sector. But it does really seem like it's escalated a lot recently. So we're reporting on the detention of 3 top investment bankers, at least over the past few weeks. And then this guidance that's apparently gone out to a lot of these state-backed brokerages, which is basically, take your passports from, a lot of their investment bankers, make sure that all of their travel overseas is pre-approved. This coming after one particularly high-profile case involving a major investment banker at Haitong, that's a Shanghai-backed securities firm, who was detained overseas and actually brought back and repatriated to China. So what it seems like here, too, is that these investment banks are also just monitoring the activity of a lot of their investment bankers a lot more closely when they do take overseas trips, if those are improved, making sure that they can't do anything outside of whatever is on the pre-approved itinerary. And one thing that I really want to make very clear here, Danny, is, this is China. As we know, the Communist Party top government officials have a lot of, influence over a lot of what's happening at these state-backed firms. But in the past, we've really only seen this kind of passport confiscation happen with really, really, really senior level, top-level bankers. The fact that this is trickling down into mid or lower level investment bankers is what is really defining this larger push, this larger anti-graft crackdown here.
Well, it certainly brings back memories of the big crackdown on tech, and that lasted 18 months with some significant, I suppose, downsizing in the industry. What is this actually going to mean for the brokerage industry?
Yeah, so Manis, I think this is pretty critical here. So this is a $1.7 trillion industry in China, and I think it's really kind of taken on a lot of renewed importance, particularly over the last year. So Manis, it was just last year that China actually changed more significantly some of the rules around its IPO market. So previously, it was a sort of a registration-based system where you had to, or a regulatory approval-based system where you had to go through regulators, and it was kind of this complicated process. So in the name of reform, China actually tried to open up its IPO IPO market say, we'll make it more of a registration-based system where you go and work with brokerages, get underwriters for like your IPOs here. So what it seems like is that China is actually stepping up a lot of the regulatory overview over what they're doing, trying to root out any corruption, and what they see is this industry that's really heavily involved with this market that, as we know, has been struggling, particularly during the economic slowdown. So what this ultimately means for the industry at large, we'll have to see. But I think, as you just pointed out there, Manitz, we've seen a lot of similar types of crackdowns in all kinds of industries within China, whether that's tech, whether that's education. So at the very least, we're seeing right now kind of a chilling effect impacting some of these firms.
It's another round of the common prosperity change implemented by Xi. Jill, thank you very much. Jill DeSista in Hong Kong. So let's stick with the China theme. The government has strongly advised car makers there to make sure advanced EV tech stays in the country. What exactly does that mean? Oliver Crook is tracking this story. Oliver, it's almost like ironic. The US is desperate not to let high tech into China. And here's China telling their EV makers, don't let the tech out of the country. Put the context around it for us. Good morning.
Yeah, that's right, Manus. I mean, how much the times have changed has been historically, that's the fear, is sending tech into China and then the IP maybe not being respected. Now we're seeing the opposite happening with China, who is so far ahead on a lot of this EV technology. They have advised the car makers to not necessarily send their advanced EV technology. And when the Chinese government advises companies to do certain things, it comes with a little bit more potentially than advice. So they said that you should be very wary. Potentially, for one thing, they don't want any production to go into India. That is interesting. But even the reason this is such a relevant conversation is with all of these trade barriers coming up, these companies are looking to build production in local areas, and in Europe, in Turkey, in Spain, in Hungary. They have plans to go plants all over there. This is the Ministry of Commerce saying basically maybe pump the brakes, and if you do build things in there, maybe send out knockdown kits, which is basically where you compose a lot of the critical tech within China, ship that out to the factories and assemble them locally. The problem is, of course, there are rules around that. In the EU, for example, you can't just do that. You need to create a certain minimum value of the car locally. So this is going to be part of the sort of ever-complicating tariff debate that we're getting here in Europe and with China.
Well, I mean, it really dampens prospects for Europe coming together to be able to establish anything together. If something as simple as EVs with China, I say simple, but it is something that there seemed to be agreement with in the EU. You had Spain's prime minister in a trip in China saying that they oppose the additional tariffs on EVs, and now Germany is joining in on that. Well, what is happening, Oliver?
Yeah, Danny, this is really interesting, and this is really bad news for Ursula von der Leyen in the EU, as they have just this new commission, which hasn't even been founded yet, which comes into power in November. Basically, they have come together with a sort of consensus to impose these tariffs on Chinese EVs that come into the country. The Germans, by the way, have always been kind of opposed to this, but they sort of fell into line. Now you have Pedro Sanchez coming in saying, we're not sure this is such a good idea. That has sort of emboldened Scholz a little bit to sort of double down. And the reason, of course, for the Germans is they ship a huge number of the really luxury, high-margin cars into China. For the Spanish, this is also the tit for tat. The Chinese are thinking about putting tariffs on, dairy products and pork. Guess what? Spain is the biggest exporter of pork over into China, so it's squeezing them there. Not only that, I mean, there's also the question of solar panels, right? Spain has a lot of sun. The solar panels that are made very cheaply are all made in China. Maybe Spain wants those to come in, but again, where this is really significant, Danny, is the point that you're making, is you're starting to see fragmentation and consensus just eroding here in Europe among these countries as you get this new commission coming into power.
Yeah, it does not bode well for challenges that Europe's about to face. Oliver, we appreciate it. Bloomberg's Oliver Crook there on Bloomberg Brief.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build, so it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
You know, it's just because we're behind the scenes, but it's big, with $1 trillion of assets almost. We're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
It is Bloomberg Brief. I'm Manus Granny alongside Danny Berger. Front pages for you. This is what we've got making the headlines around the world. First up, the family behind the luxury brand Chanel and the billionaire heiress of L'Oréal have bought a stake in the fashion label The Row. That was founded by the Olsen twins. The deal values The Row at $1 billion.
Next up, the Financial Times has this. The IEA is out with a new report that oil prices are going to keep falling. Demand is weakening. In fact, it's its lowest since the pandemic. But producers continue to pump volumes that exceed global demand, even with an OPEC Plus keeping their cuts.
And UniCredit revealed yesterday that they'd now built up a 9% stake in Commerzbank. That adds all the shares that Berlin offered this week to a position it had quietly built in recent weeks. And speculation of a possible sale. Minded UniCredit CEO Andrea Orcel spoke to Bloomberg about the move in the last hour.
The ultimate goal is what everybody talks about. Europe needs stronger banks. Europe needs cross-border. Europe needs banks that are capable to support each industry and the development of Europe so that we are an economic bloc that can hold its own against the US and China.
Andrea Orcel there speaking to Francine a little bit earlier on. It's interesting, he said, we went to the government, we said, and to quote the phrase I used earlier, fill or kill, give me your stake or we walk away.
But see, this is the weird thing is because the German government came out and said, we were surprised that UniCredit built this stake. If you listen to Orcel, he literally said, how could they be surprised? They knew we had 4% and they themselves sold us another 4%. How could this shock them?
Exactly. So it's two different sides of the story. The issue is going to be the labor unions. The labor representative came out this morning and said, actually, you know what? We prefer to tie up with a French bank rather than an Italian bank. No irony there. And Olaf Scholz has a lot of political issues in Germany from the right and the left. And this kind of deal is just going to raise a lot more hackles in the German system.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
From our global headquarters in New York, welcome to Bloomberg Brief. I'm Danny Berger alongside Manish Cranny. Let's set your agenda.
Countdown to the ECB, rate cuts expected, but how guarded will the guidance be? Banking crackdown, China detains top investment bankers and asks others to hand in their passports. And a fresh cash injection. OpenAI seeks billions from investors, boosting the firm's value to $150 billion. Danny, good morning. Counting down to the ECB.
Counting down to the ECB, still living with the repercussions of a CPI that came in just ever so slightly stronger than expected. It's been a wild ride in this equity market. First, equities plunged 1.6% off the back of that. They recover to end up the day more than 1%. We're up again in the future session, about 0.25%. The first time that we've gone down 1%, rebounded 1% since 2022. Meanwhile, 10-year yields under pressure again this morning, up by 2 basis points. You saw yields come up yesterday, breaking a 6-day streak of bond buying. Meanwhile, the euro, as you mentioned, Manis, it is ECB day. We're not really doing much this morning. We're at 110 on euro versus the dollar, just slightly stronger, Manis.
How to make that sound exciting. How to make the ECB sound exciting, Danny. But it's interesting. Goldman Sachs have actually lowered their terminal rate to around 2%. We just had a conversation with Luda Sobran, and he really was of the view they can take their time, even though Germany, as you say, is one breath away from what a serious recession. You've got wages coming down, so that sort of meets the criteria for the ECB. It's a delicate balance on what Lagarde will say today.
Yeah. I just can't get over the fiscal problem that Europe is facing right now. You have Mario Draghi saying an immense amount of spending and borrowing needs to happen in order for us to remain competitive, and Europe is still squabbling over EV tariffs on China. They still can't figure that out. What does that bode for the wider European picture and for any sort of fiscal support once they do get the landing, if they can't even agree on something like that?
Well, we have seen Europe galvanize themselves in moments of extreme existential angst when it comes to the European debt crisis, etc. Moments of existential angst is what takes Europe to actually galvanize themselves. I don't think we're quite there over EVs just yet. But let's talk about the ECB and what's widely expected for the second time in 2024, and that is the decision coming along in less than a few hours. Let's get to Frankfurt, to our ECB reporter. It is Lizzie Burden. She's on the ground. So 25 basis points is assumed, but it's all about the destination. It's not the journey. It's the destination of where Lagarde wants to guide us to.
Not in life, but for the ECB, perhaps, yes, Manis. It's pretty much a done deal that we'll get a quarter point today because, as you say, inflation receding, the growth risks mounting. It's been pretty much unanimously endorsed by ECB speakers. So the focus on whether they can squeeze in another cut in October before sticking to this quarterly cadence of quarter point cuts all the way to 2.5% by this time next year. That's what economists expect. Markets a bit more aggressive, and this is going to be the focus, I think, of the press conference. But Christine Lagarde will want to be coy. She'll want to stick to the language of data dependence, not least because of the divergence on the Governing Council about where the neutral rate lies. But if she does pour cold water on an October cut, you could see a bit of a bounce to the euro. I'll also look to the forecasts for clues. Do they give a haircut to the 2024 growth outlook after that weaker than initially reported second quarter growth print? And does she emphasize the need to react more to growth than inflation risks? That's what Jan Hatzius at Goldman is talking about. He now sees consecutive cuts rather than at quarterly meetings, and he specifically calls out the growth picture, specifically the manufacturing weakness, and specifically in Germany.
Lizzie, the other important thing taking shape in Europe is a potentially transformational consolidation. UniCredit taking a stake in Commerzbank, by all accounts with the intention to buy out Commerzbank. How much of this is it on the mind of an ECB, of a wider Europe that has for so long called for some sort of banking union in Europe?
I'm sure it'll be on the mind of Christine Lagarde today, Danny. I'm not sure whether it'll be on her lips, but journalists are going to ask her about it at the press conference. I reckon that her answers will stick to the principle of financial stability. Perhaps she will say that this is banking consolidation across Europe, something that they've talked about for a long time, that it sends a signal about the single market. But I would eat my hat if she talks specifically about the deal between UniCredit and Commerzbank. She would probably say, look, there are principles to follow in the sense that they've got to give early communication about a deal, there are rules to follow, and there are permissions that ECB has got to give. But I do not think she's going to get into the specifics today.
All right, Lizzie, thank you very much. 8:15 New York time is when we're going to get that decision. Bloomberg's Lizzie Burden. Now, from the ECB to the Fed and the dollar, Dara Meyer of HSBC weighs in on the dollar itself, writing this: the U.S. dollar's inability to capitalize on weak activity data outside of the U.S. suggests a market predilection for U.S. dollar weakness. The U.S. dollar has found a base, but it is languishing at levels inconsistent with the likely U.S. rate path, and more so in terms of relative economic merits. He joins us now. Dara, thanks so much for coming in this morning. Great to see you.
Thanks for that.
I mean, what do you make of just this market bias for a weaker dollar, despite anemic growth in Europe, despite China being on its knees in terms of trying to get growth up there, and yet it is U.S. exceptionalism, a narrative that is evaporated?
Well, it is frankly weird, and the global FX market is just Fed fixated. That's it. I mean, that's the only conversation. You know, this whole 25 versus 50 nonsense, frankly, I've been like, we've always been in the 25 camp. I kept having frozen in my head that song going, let it go, the whole 50 thing, just let it go. And finally yesterday, they let it go. So that's nice. We've got that sorted. But no one talks about the ECB in the context of where should euro dollar be. It's just really quite weird. And, you know, as you say, European growth, Eurozone economic activity indicators, 10 weeks running, they've been coming in below expectations. Yesterday we had UK GDP, 0, and it's been 0 3 of the last 4 months. And yet people tell us, I'm worried about the US economy, which is running along at 2.5% in Q3 so far.
It's trucking along very nicely. Then explain to us and to the market why Eurodollar's at 110. Morgan Stanley, they've got a hell of a call. They're down at 102. So this probably chimes for you, which is a stronger dollar against sterling, against the euro, because this is a stronger economy, and the others may well have to outcut us.
I think so. And at the very least, the currency market has to take account of the fact that the others will be cutting rates as well as the Fed. And actually our economics team expect the Fed to cut by 175 basis points by the end of next year. But they also expect that the Bank of England will have cut 175 by then, that the ECB will have cut, you know, it's all about relatives. It's like Christmas, man, right? It's all about relatives.
I love Christmas, Dara.
Do you? Good man.
Christmas.
So do I.
And the relatives?
Yeah, she's not. Danny's cage on the relatives. So it all has to happen, right? So, and it's all happening at the same. So it's a bit of a wash. I liked what you said about euro this morning. It's a bit boring. Just before I came on, I looked at the consensus for euro dollar for a year's time, and it is higher, 0.2% higher. I mean, snooze fest. So look, we've got 105 on euro dollar. We've got 125 on cable. You know, and still comfortable with both those, but it's principally a dollar, not just a dollar call. It's also about euro. It's also about sterling.
When does it get to a point where we can't ignore euro anymore? You look at some of the political issues in Europe. VW, for example, talking about closing a plant in Germany when automaking is such a big part of this economy. When do these things become more of a macro issue?
Well, I thought it was interesting, you know, just before I came on, that you were talking about the European fiscal situation. I think that's completely underplayed in the currency market, right? I mean, my angle is slightly different, because what I think is going to be sensitive is the Growth and Stability Pact is coming back with a vengeance, and you are going to constrain governments really in terms of their national flexibility around fiscal policy. What does that do to an electorate that's already polarized in Europe, right? If you say to a government, if Brussels says to whomever, sorry lads, you need to behave differently, you need to cut spending, you need to raise taxes. I don't know, I think I could see a lot more political friction around that, which isn't manifest in euro as yet. And yet everyone's fixated on what does the US election mean for US fiscal policy. I think we need to start talking about European fiscal policy as well.
Well, those two policies, you know, the US one is kicked into the long grass, really, isn't it, until next year, until we find out who is in charge. It's interesting, with TD with us last week, and they said be more concerned about the outside world. You say the dollar is failing to capitalize on the weak data outside the United States. Where is the weakest? If we've talked about Europe, but where else is there that's a major headwind?
I think it's a collective thing, honestly, Manus. You know, as you say, we've mentioned Europe. UK, I thought was looking a little bit better through the second quarter. We had reasonable GDP growth. Then they revised it down. Then they told us it was mostly government spending and inventories. And you're like, oh, really? That's not a great mix, right? China's still underwhelming. So it's hard. I mean, where do you look globally and go, they're doing great, right? And so I guess the phrase I've used in the past is, even if we allow the US economy is having a soft landing, which is kind of what you need, it's really Goldilocks with an American accent, right? And I've said that before, and I still think it holds. So it isn't a global soft landing, it's essentially US exceptionalism.
Yeah.
And then you're buying the dollar. You know, it's not a global story of everyone landing it perfectly, economic resilience. It is a US story of Goldilocks.
Can I just go back to Europe for a moment and talking about sort of the fiscal impulse of it being, you know, handed down from Brussels? You have Christian Lindner saying that we wouldn't agree to something like joint debt. We don't like this plan Mario Draghi does out. It should be every country for itself. We mentioned the EV tariffs, which, again, Spain is disagreeing with. How confident are you that we would actually have the ability of the EU to sort of enforce some of these fiscal rules more widely when you are starting to see these pockets of rebellion and politics dividing nations too?
Well, it's been a long-running story in Europe, right, is that we don't have fiscal union, and that in a way complicates life for the ECB, for the euro. I still think it holds true. You know, the enforcement of the Growth and Stability Pact has been patchy over the multiple years that it's been in play, right? And I think what's a little bit different now, though, is we've got a core economy, France, which is in the spotlight in that context. Previously, it was the periphery, and you could kind of north versus south bashing in Europe. That's not the case. So if you want a path to fiscal union, which is presumably what Draghi is suggesting we should be on, you need the Growth and Stability Pact to work, because you need that convergence of fiscal behavior to be able to implement joint issuance.
Can we just round off? The one thing that came through with Ludo a little bit earlier on was the rate cutting cycle here in the United States could be interrupted by the election, contested election, and the issues around that. That's his concern. So it's a slow cutting cycle that can be interrupted. In terms of tail risk, how much is the election a tail risk for you? And where does the dollar function in that tail risk event?
I think at the moment people are talking about the election a lot, but they're not investing for the election a lot, right? They kind of want to know. They ask, well, what does it mean for the dollar? And you kind of give your multifaceted answer.
Are they asking you that a lot? Is that?
Yeah, they do. I mean, they don't expect me to have a clever answer, but they're polite. They ask. And I think this is the key. Will be, when does it get traction? I think now, you know, we're beyond the 8-week mark. It feels like we're out of the phony game and into the real game for markets around the election. For me, the simple tailwind aspect is uncertainty. If you think the election's going to increase market volatility, get VIX higher, equities wobbling, I know the dollar should capitalize on that. And so I think the people who have snowplowed their 50 basis point call for September to November and to December, they're just going to have to let it go again. And that's it. I think we're on a 25 basis point cadence. We get 75 this year. We might get a 75, 100 next year, thereabouts. I'm not sure why we continue to sell the dollar.
I wish you had the rights to play Let It Go right now.
I know. We do sing it in the commercial break.
I'm waiting for Manus to sing it.
No. We did that once in our career. We won't be doing that. We won't be doing that twice. But I love the snow plows. And it's, you know what? 50 basis points. It's fading like snow off a ditch.
It is.
There you go. Darren Maher, thank you very much from HSBC, our guest this morning on markets. This is Bloomberg.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close, weekdays on Bloomberg. Context changes everything.
Our principles, our policies in support of the Palestinian people will never change. Our policy in having a two-state solution will never change, and nothing will compromise it. And as long as we are, having the capability to be helpful, we will do it. We did that between Afghanistan, between Taliban and the US. We did that between different parties in Lebanon and Sudan and others. And that's basically the core of our foreign policy. It's been built based on mediation, on trying to help in resolving conflicts between the party. There are countries or people might not like it, but we don't ask everyone to like it, just to understand it.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bloomberg Brief. I'm Manus Cranley alongside Danny Berger here in New York. OpenAI, they are back looking to raise $6.5 billion in equity financing from investors. The valuation on the ticket, $150 billion. That is a significant jump higher than earlier this year when the company's tender offer put it at $86 billion. Tom McKenzie's tracking the story. Anybody who thought that AI was going to run out of valuation puff, they are sadly mistaken. So this is the next leg in the valuation for OpenAI. Tell us the latest on this milestone.
Yeah, look, as you say, from 86 billion earlier this year to 150 billion US dollars, looking to raise $6.5 billion. As you say, it suggests that the demand and the want of these investors to get exposure to this business, of course, the maker of ChatGPT, is still there. The backers, or at least those in discussion around raising and around funding this $6.5 billion, include Thrive Capital, but also, interestingly, of course, Microsoft, NVIDIA, and Apple. Haven't confirmed yet, but they are looking at this. OpenAI also considering a credit facility of about $5 billion, so they had financial firepower then on the back of this, about $11.5 billion US dollars. The CFO of OpenAI saying it will be spent on compute. So think GPUs from NVIDIA, suggests the demand is still there for OpenAI, so it can be spent on compute and expenses. The business as well, OpenAI also hoping that they can return some capital to their employees later this year, allow them to sell some of their shares as well, and it could give them the options, or at least the liquidity to be able to do that.
Tom, we also had this Goldman Sachs tech conference in San Francisco yesterday that the NVIDIA CEO Jensen Huang spoke at. After he spoke, shares were up some 8% on the day. He was talking about things getting tense with the company's customers. This is what he had to say.
Delivery of our components and our technology and our infrastructure and software is really emotional for people because it directly affects their revenues, it directly affects their competitiveness. And so we probably have more emotional customers today.
I mean, what a way to describe it. It's getting emotional. The conversation has been, are these companies getting a return on investment? Does this signify that it doesn't even matter, that they're just so emotional, they need to buy the chips anyway?
Look, he really stressed this emotion, didn't he? I think in one soundbite he said the word emotional about four or five times. So it's a colourful way of framing, as you say, the tightness in this market and the fact that the demand is still there. He says the demand and the supply is still not able to match that demand. And of course, they design the chips, but the company that actually churns the physical product out, the GPUs, is TSMC over in Taiwan. He again extolled the virtues of that company, but clearly there's catch-up that's needed to be able to produce these GPUs to match that demand. He also said the future GPU coming in later this year. The Blackwell, he's seeing strong demand for that as well from their customers. You rightly point to the question around ROI. Top of mind, of course, for those investing in the AI space or Gen AI space, Danny. And he gave a few numbers on that. Interestingly, he said, he pushed back on the idea that there wasn't ROI. He said, look, if you're a hyperscaler, so a Microsoft or an Amazon, if you're buying these GPUs, putting them to a data center, you might spend $1, but you're going to get $5 upside on the value of renting out those data centers, those servers, those data centers, I should say, to your customers. And then if you're one of those companies renting that space, then you're going to see a massive pickup in terms of efficiency, he says, as a result of shifting from the compute that we have now to accelerated compute efficiency of up to 20x. That was at least the detail coming from Jensen Huang. So really trying to make the case that there is still ROI to be had in investing around GPUs.
Yeah, really an attempt to pour cold water over that. Tom, thanks so much. Bloomberg's Tom McKenzie. Okay, elsewhere in the U.S., 2 of Wall Street's biggest banks are rolling out measures that may ease junior bankers' workloads. There's been complaints across the industry that weekly hours are creeping past 100. So, Manus, the details. Bank of America is going to have a new internal platform, and that will more closely monitor individual workloads. It's the so-called banking diary. And then at J.P. Morgan, they're going to limit junior banking hours to 80 per week in most cases.
Look, this comes down to deal flow as well, and an industry that wants to be seen to be responsible for their staff. You had a young banker at Bank of America who died suddenly, and I think that sort of brought into the consciousness about, well, what are your young bankers doing? But look at the deal flow. The deal flow spike in the first 6 months of the year relative to where we are now, just coming off the boil. So in some ways, the marketplace itself is helping them, as it were, look after the staff a little bit more for now. But you can be sure, as soon as that deal flow flips to the upside, the expectations are going to rise again.
I was going to say, I have a really hard time believing that they'll actually stick to this. So just take JP Morgan as the case study, for example, right? They say, okay, only 80 hours per week, unless there's an exceptional circumstance. How often do you think MDs are going to find exceptional circumstances to get their employees to work more? And you have cases, for example, at Bakes, where they've tried to limit hours, saying if you go to 100 hours a week, you know, choose all these red flags. A bunch of junior bankers talked to Bloomberg back over the summer and said that they've been basically lying in their work logs because they didn't want it flagged to HR. So yeah, they can say all these niceties, but in practice, does it really happen?
Look, the bottom line is, if you want to get to the top of this pile, you know, it is a competition. It is a competition, and it's in terms of delivery. So on the one side, you have these gestures, but the reality is, if you want to be the top of the bonus pile and the top producer, I assure you, from vicious personal experience, it means you work a little bit harder than your peers on the desk.
And they're all scared of being replaced by AI too. So there's that.
AI is supposed to come along and possibly help them all. They
lose their jobs.
No, AI's coming after their IQ rather than their EQ. I think that's a line from Larry Summers. But look, the AI is supposed to help them do some of the grunt work as well in terms of the analytics.
Yeah.
In theory.
Well, Citi said that some of their junior bankers would be replaced by AI if things go according to plan.
Don't go to Citi. There you go. Look, it's going to be an industry issue. Let's talk a little bit about China, because, again, there's a little bit more heat turning up in China in terms of their investment bankers. 8,700 to be precise. Now, at least 3 executives from different securities firms have been detained by Chinese authorities since August, sending pretty much a chill through the industry. So that is one story to keep an eye on that's evolving. We'll take you through the rest of the trading day. We're setting up for the ECB rate decision and the press conference from Christine Lagarde on Bloomberg.
morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
It's Bloomberg Brief. Danny Berger alongside Manus Cranny in New York. Let's get you set up for your trading day. The ECB will announce its rate decision at 8:15 a.m. Eastern. Then there will be a press conference from President Christine Lagarde at 8:45 a.m. Then we're going to get some more economic data. We get another round of jobless claims. PPI also comes out. That's at 8:30 a.m. And then some earnings with Kroger before the bell and Adobe after the bell. Manus.
Yeah, Danny, it's interesting how we've had two conversations, both with Ludo and with Dara from HSBC, basically saying, get rid of your snowplow, your obsession with this 50 basis point jumbo rate cut. Stop pushing it forward. Stop obsessing about it. It's not needed. It's not necessary. And just lose it. And I think to a certain extent, you know, the rates market sort of heard that yesterday. The equity market just plowed on, excuse the pun, higher on tech, really.
Well, which is maybe good because the equity market's been so negative recently, but it has been a market that's more willing to price in U.S. downside. This is something that Dara talked about that I think is interesting. Man, should we look at some photos of space?
A little bit of calm.
A little bit of calm.
Take us into surveillance.
Decisions. Okay, so what you're looking at is the SpaceX Doris Dawn crew. They're getting ready for a spacewalk to test out the new spacesuits. You're going to have the billionaire Jared Isaacman and Sarah Gillis, the two who get to do it.
Yeah, it's going to be 2 hours from top to tail. I mean, the main goal of this is to test the suits that have been developed inside. We'll leave you with a live shot.
Make sure that we're exposed to categories that continue to be relevant to consumers, that we're positioned in categories where we have a competitive right to win.
By strategically adding and shedding assets, General Mills has turned over about 20% of its net sales base in the last 6 years. It's dramatically expanded its pet food platform, starting with the purchase of Blue Buffalo pet products in 2018. That expansion dovetailed with a boom in demand.
Pet in the U.S., pet feeding and treating, is a $50 billion category. It's almost 5 times the size of a category like cereal.
Is this the future of the company? I mean, we so much associate General Mills with breakfast and cereals, human breakfast and human cereals. Are we now going to be thinking about General Mills much more as a pet food company?
I think you'll be thinking about General Mills as a food company where we treat all the members of the family like family.
The humanization of pets is actually the biggest driver of pet food and pet treating growth. It has derivatives in not only feeding, which is the core thing that most households where most of the dollars go against the pet, but treating, and then you start to branch out to things like vitamins and minerals and supplements.
People really love their pets. They want to take care of their pets like they do their family, and it really is a global phenomenon. That's why we recently entered the China market with Blue Buffalo. That's why we bought Edgar & Cooper recently in Europe, because we see the same kinds of trends that have played out here in the U.S. playing out all over the world.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
In equity land, we're mostly pricing in a soft landing circumstance right now.
It's really not a bad economy, it's a good economy, and I don't think it calls for any drastic Fed action.
I don't really care what they do next week. What I care about is how the markets react.
Right now, investors are on edge, and so far it's been a good year, so you could see some people continue to take profits.
For the equity market, volatility is going to dominate because from here, so much good economic news is priced in.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now with equity futures on the S&P 500. Slightly positive coming into Thursday on a 3-day winning streak through Wednesday on the S&P 500. Thank you, NVIDIA. It's a 3-day rally with plenty of volatility. These are your scores, and this is your day ahead. A little bit later on this morning, 8:15 Eastern Time, an ECB interest rate decision. Then at 8:30, 2 doses of data, PPI and Bramo initial jobless claims.
How much are we kind of taking the pressure off initial jobless claims? Because now the question isn't whether we go 25 or 50, it's we're going to go 25, and just how much can we let the equity market rip in the face of a soft landing in tandem with rate cuts? I mean, it seems like people suddenly have breathed a breath of fresh air. Yesterday we thought we weren't going to get resolution. We did, and now everyone's feeling golden again.
Thank you, NVIDIA. You want to talk about NVIDIA? The NVIDIA CEO at a conference comes out and says what? Things are so good, demand is so great that we've got tension between our customers and our ability to supply them.
People get emotional about deliveries. If they can't get their deliveries on time, it is something that is visceral and goes to their core because they need those chips so badly. So NVIDIA shares up more than 8%. You've got about 13.7% rally so far this week alone. I mean, you just talk about how volatile things are. This is a massive $1 trillion stock, and you're seeing it bounce around by 8% on any given day because people get emotional.
$200 billion of market cap, just like that in a single session. We're getting used to that. Should we be getting used to that? Need to talk about crude as well. Brent crude bouncing back by 1.8%. WTI still in the high 60s at 68.58. We're up by 1.9%. We heard from the IEA confirming some of the fears that a lot of you have about oil demand. Slowing growth, and slowing growth sharply. The slowest rate of growth since the pandemic for global oil demand, and that's a problem.
That is a problem. We've seen this reflected in the prices. Now the IEA coming out with their report about the future of what this market looks like. So not exactly this is a surprise given what people have been talking about. What I find so interesting is the IEA was also leaning into what we heard from Vitol, which is the fact that in China, gasoline uptick is really starting to wane because of everyone just going out and buying EVs, and they have very cheap EVs. So that is one of the issues that is happening, this transition, but people are just not consuming as much.
So we get an ECB rate decision a little bit later this morning. We get a set of forecasts as well. I find the compare and contrast between Europe and the United States to be quite amazing. The fact that we're having this discussion about going 25 or 50 at the Federal Reserve, with inflation essentially where it is over in Europe, here in the United States, and the growth profile in America seemingly so much more robust here in America versus Europe. Why isn't there a conversation about cutting 50 basis points to the ECB later this morning?
I couldn't agree more. I mean, this has been my big question. Why are we not talking about the ECB cutting much more aggressively than the Federal Reserve, given the fact that if they had a dual mandate, which evidently they don't, they would be looking very much at the growth picture. They'd be looking at Germany and they'd be saying, whoa, just a kid in just a second here. We want to cut a little bit more aggressively. How much is this just because they already telegraphed something and they have to kind of stick with it? And that's the reason why today's going to be very interesting. How much do they telegraph going forward? That they are open to bigger cuts, taking a cue from Jay Powell over in Jackson Hole.
Well, I think essentially you nailed it. There's a structural issue. It's a single mandate central bank. It's inflation. If they had a dual mandate, maybe we'd get a different picture. I also think it's historical. You've got this German influence on the central bank still, where they're scarred by the inflation of decades ago and worried about the inflation profile, the backdrop in Europe still currently in 2024.
Here's the irony of that. Germany has a disinflation or deflation problem. The inflation right now is in the peripheral regions where they're getting so much tourism that they don't want anymore, that they actually are seeing that kind of growth. So to me, I wonder how much that institutional sort of disdain for inflation goes away, given the growth picture that's quite dire.
Germany's got a lot of things to say at the moment. We'll revisit some of that a little bit later this hour. From New York City, welcome to the program. The broader price action looks like this. Cross-asset, equity futures positive by 0.1% on the S&P 500. In the bond market, what a trip. We talked about the round trip on Nvidia all over the place in the bond market in yesterday's session. The 10-year up by 2 basis points to 367.40. Lisa, what did you make of that? Initially, the bond market move in the morning and then in the afternoon, all over the place.
I make the auctions. That's what it had to come down to, essentially. And you can laugh, but it actually was very much the auctions. The auctions have been very strong this week. And yesterday we saw a sell-off in 10-year yields, and then you saw people just rush to buy the debt at that 1 p.m. auction. It just highlights how that can trigger some of the feeling that maybe there is this demand and there's a sense that we are going back to a new normal that looks a lot like the old normal. That was sort of what I attribute, and then people kind of played around and the algos got involved. But today we've got a $22 billion 30-year notes being sold, and maybe you'll see a similar round trip as a result.
I'm reflecting on something Mike Wilson and Morgan Stanley told us on this program yesterday, that we're done with the inflation story. And I just feel like the bond market and bond investors are very much done with the inflation story. What I mentioned yesterday was that equity investors are worried maybe the Federal Reserve might not be. And that's why this conversation has steered away from 50 and back towards 25 for next week.
That's what I thought was interesting yesterday. You saw a reinversion of the yield curve, this sort of wondering whether if the Fed does hold off on cutting rates so aggressively, whether you could start to think about maybe an inflation issue that was stickier. Maybe you're looking at a better economy. Look, honestly, people don't know. They're basically spitballing, and that's basically what we saw yesterday with the fact that you're seeing a $1 trillion stock trade like a penny stock. So, you know, for us to really give real much narrative to this, well, good luck.
The base case shifted at Citi. Andrew Hollenhorst shifting away from 50, now looking for 25, a 25 basis point cut, the Federal Reserve, at next week's meeting. Here's the lineup for this hour. Coming up, we'll catch up with Sharon Bell of Goldman Sachs as big tech stages a big comeback. Javier Blas of Bloomberg Opinion as China weighs on crude demand. And Rob Waldner of Invesco ahead of a string of central bank decisions kicking off a little bit later on this morning. We begin with our top story, big tech fueling a rebound in global equities led by, guess who, Nvidia. Sharon Bell of Goldman Sachs writing, today's technology sector reflects rational exuberance, justified by strong fundamentals and earnings growth that has surpassed that of the broader market. Sharon joins us now for more. Sharon, as always, welcome to the program. Let's talk about how rational some of those $200 billion single-day moves on a single stock actually are. What do you make of some of the volatility we're seeing at the single name level, Sharon? Some of these massive moves from day to day.
Yeah, I mean, it does show that the market overall is a little bit vulnerable. You have a market where some of the very biggest companies are this volatile, losing and gaining in individual days like this. I do think this is a reflection of all the uncertainty we have at the moment. Uncertainty over interest rates, policy, fiscal policy, political outcomes for the election, just a lot of uncertainty, which the market is just finding difficult to price.
You're in Europe, and the uncertainty right now around Europe is actually less than a lot of people would expect it to be in terms of how big the rate cut will be at the European Central Bank later this morning. Do you think that there will be a time later this year we'll be talking about an outsized cut from the ECB in response to outsized weakness, particularly with Germany?
Yeah, Germany has been super weak. I completely agree. The second quarter saw a contraction in GDP. The manufacturing sector is clearly in recession. It has been for some time. There's a talk about now more sort of German layoffs or unemployment. I think it's absolutely clear that Germany is very, very weak. But it's not just Germany, of course, making up the euro area. Other countries have been a little bit stronger than Germany, and the ECB is looking at that entire picture. Plus, there's some parts of inflation that have been quite sticky, like services inflation. We think the ECB will go a quarter point. We think that they're unlikely to try and go faster than that at the moment. But they... next year, I think they might go every meeting, just reflecting, as you point out, that growth has clearly weakened.
When you said there's a lot of uncertainty and it's hard to understand exactly some of the patterns in markets right now, how do you explain the DAX being up 9% in the face of outsized weakness in Germany and a German economy that's facing every structural headwind you could possibly imagine, from China to the auto sector to geopolitical risk?
Absolutely, and I've been asked this question quite a lot by our clients, by our investors, and the DAX have done perfectly fine this year. It's not been a super outperformer versus other indices, but it's kept pace, let's say, with other European indices, even though German economy has been clearly very weak. But the DAX isn't really a reflection of the German economy. The biggest companies, it's almost like there's a magnificent 4 or 5 companies in the DAX. SAP, for example, is 15% of the index. It's done well this year. You've got other big caps, Rheinmetall, for example, in defense, which have done well. You've got Siemens Energy. These are really big cap companies which aren't necessarily super exposed to the German economy overall. Whereas some of the auto manufacturers are now actually quite smaller parts. Chemicals is a smaller part of the index. I'm not saying it's not sensitive at all to German economic growth or to China growth, which has also been weak. But I think it's a reflection of just different stock makeup. The MDAX, the mid-cap index, that has just been much weaker this year, and I think is more of a reflection of that weak German economic outcome.
Sharon, when you look at the German economy, though, Lisa named a number of issues that they're dealing with: slowing manufacturing, exposure to China, more tariffs. Which one of these is what you're most concerned about for some of those players that you say are less exposed to the German economy, but they're still exposed to what's going on internationally?
For sure, and you worry, I mean, almost every stock to some extent has got some cyclicality. So if growth does slow, that's generally bad news. That being all said, that if interest rates are coming down, that provides a little bit of an offset as well. The market will start to price in at some point an economic recovery. But, I agree. I think probably the most worrisome thing for Germany is not so much the flat German economic performance we've seen in the last few quarters. It's just the weakness in China. And the fact that China domestic demand has been weak, while China exports, which is effectively competition for the German exporters, have been so incredibly strong. And that combination, I think, is quite painful.
Is Germany the worst when it comes to that exposure to China across Europe?
Definitely. I mean, European companies generally do have a high amount of China exposure, probably about 10% on average for the Stock 600, the broad European index. So there's quite a lot of China exposure generally. I mean, luxury goods, for example, which aren't big in the German market, they have a lot of China exposure. So it's certainly not just Germany, but Germany does have a lot of exposure via the auto companies, for example, via some of the other industrials. And that exposure, I think, is not just in terms of weaker domestic demand in China, it's also the fact that China is exporting at lower prices into Germany and to other markets that Germany is competing with China in.
Sharon, you wrote a brilliant note on this, and I suggest people should reach out to you directly to get the full note. Just the flavour of it, the title: German stocks are breaking free from the economy. Now, Sharon, I wonder if the earnings profile is going to improve because of that and some of the dynamics that you've listed. Can you walk us through how Europe and German equities in the market are attracting flows? Because we're so familiar with the problem. Is the money actually coming in?
Do you mean, are people buying European stocks?
Precisely.
Generally, yeah. People have been quite cautious. I was in New York last week and talking about Europe generally, and Europe has underperformed the US for a long time. It's underperformed US equities year to date as well. That being said, not by as much as perhaps you'd think, given that weaker German economic outcome that we've just talked about. And I think that is a reflection of the fact that some of the biggest companies are actually incredibly high quality growth companies as well. Are investors buying it? To some extent, yes. There is a little bit more of a tick up in interest in Europe. I think also even in the UK, where the UK market proved to be very defensive in the big sell-off that we saw in August, also European companies are buying back shares. So you don't necessarily need a huge amount of investor flows if companies themselves are doing the buying for you by buying back their own shares. So dividends are high across Europe, cash flow is good, which is supporting that, buying back shares, and a little bit of increased investor interest as well.
Sharon, before we let you go, Morgan Stanley just cut its expectation for the euro to potentially parity as a result of some of the weakness. Goldman Sachs, your own firm, just recently cut the ECB terminal rate expectation to about 2%. How concerned are you about the weakness of the euro as some headwind to the call that you have?
No, not super concerned. So if you're looking at European companies, in some ways the euro coming down should be helpful. It means that you become more competitive. So if the euro does come down, it's not in our forecast that it would, but that would help Europe to become more competitive. But I kind of get your point. You're basically saying that if you're a global investor, why would you invest in Europe if you're going to lose it on the currency if the currency starts coming down? It's not our view that it will, but it does put off some global investors that tend to invest in Europe on an un-currency hedge basis. So I think if the fall in the euro is a reflection of doom and gloom on Europe, and the European economy really is much, much weaker than we expect, then yes, I would see it as damaging. If it's just a modest decline and it makes Europe a little bit more competitive globally, then I don't think it's all that damaging.
Hey, Sharon, appreciate your time, as always. Sharon Bell there of Goldman Sachs out of London with a fantastic note, going through a list of reasons of ultimately why we are so cautious on Europe around the world at the moment. Manufacturing issues, problems with China, trade, energy security, unpredictable politics, put it all together. It's been a big reason why people haven't been buying Europe for a long, long time.
Which is the reason why, I guess the one question is, why should they start now? Right? I mean, is it going to be really rate cuts by the ECB? Is it going to be optimism about specific companies that are somehow divorced from the overall economy? It's the reason why you've had lackluster kinds of performance. At the same time, how many people around this table come on and say, we're looking to diversify outside of the U.S.? This is the problem. To where? And how much can you get ambitious and excited about the opportunities there?
Germany's been very outspoken in the last 24 hours. Anne-Marie, have you noticed that? How outspoken Germany has been? A misplaced sense of arrogance, maybe, considering what's happening domestically at the moment?
They have been very outspoken on the VW story about what is going on in terms of energy transition. And then the most outspoken has obviously been on what's going on with Commerzbank and how potentially the unions would prefer a tie-up with the French over the Italian. Honestly, pretty rude.
This is 2024. It is not 2012. The idea back in 2012 that Germany could lord it over Europe and tell the Europeans what to do, to have this attitude 12 months later in 2024, I find unbelievable. This quote from the Labour representative who sits on the German Bank Supervisory Board to a French business daily newspaper, we understand each other better with the French in terms of industrial policy on how to run a bank than with, say, the bankers in Milan. If you're at a dance party and no one is asking you to dance, you don't just get to stand around and say, we're waiting for someone hotter to walk in the room. No one's coming up to you. Take a look in the mirror. That's what needs to happen. I'm deadly serious.
Germany.
The German industrial problems right now are absolutely massive. It was really interesting to see Donald Trump went after Germany just a little bit in the debate earlier this week. And the Germans were tweeting about it as if the energy security issues in Germany weren't a problem, that things were going to be okay. And oh, by the way, we don't eat cats and dogs. You know, throwing around that kind of snark on the international stage, I don't think is helpful at all when Europe has got some major issues.
Yeah, it was pretty remarkable seeing a foreign office come out and have a tweet about an election for their closest ally that's also sending them a lot of liquefied natural gas and basically bailed them out for their mistake of enslaving themselves to cheap Russian energy, which is why they had a manufacturing base, which we now see is in decline. And also, Trump's point was Germany was abandoning fossil fuels at a time when they shouldn't have been because of what was going on geopolitically.
I'm looking forward to your book, Germany and Their Misplaced Sense of Arrogance, and the U.S. and the Privilege of Acting Recklessly.
Sure.
That can be your title.
Europe has changed a lot in the last decade. And there is a big problem child.
And
it's not Italy and Spain like it used to be. It's other nations now. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Danny Berger. Morning, Danny.
Good morning, John. 7&I shares jumped after Couche-Tard said it was discussing a higher bid for the company. People familiar said that in order to get 7&I to enter negotiations, the bids would need to be significantly higher than what they initially proposed. That was $14.86 a share. The FT is also reporting that the Japanese convenience store operator appointed Nomura to advise on that takeover bid. Atlanta Fed President Raphael Bostic violated the central bank's rules around financial disclosure and trading activity. The Fed's independent inspector general said that there was no evidence that Bostic made trades based on confidential information or acted on financial conflicts of interest. The trades were handled by third parties, and neither Bostic nor his personal advisors directed specific trades. People familiar say OpenAI is in talks to raise another $6.5 billion in equity financing at around a valuation of $150 billion. That's a significant jump from earlier in the year when the company's tender offer put it at $86 billion. That now puts OpenAI in the top 100 most valuable companies. OpenAI is also reportedly in talks to raise $5 billion in debt from banks in the form of a revolving credit facility. That's your brief, John.
Hey, Danny, thank you. More from Danny in 30 minutes' time. I'm next on the programme debating a rematch.
We won the debate according to every poll, every single poll. I think that, are we going to do a rematch? I just don't know.
That conversation just around the corner, live from New York City this morning. Good morning.
We spent some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Or other authorities.
Could face bigger challenges next.
It was going to keep reading World Cup. This is a 3
as the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Three-day winning streak on the S&P 500, just a little bit firmer at the moment, looking to make it day 4. Equity futures on the S&P positive by 0.1%. Under Savannah's this morning, debating a rematch.
When a fighter has a bad fight, gets knocked out, or loses the fight, the first thing he says is, we want a rematch. So we won the debate according to every poll, every single poll. I think that, are we going to do a rematch? I just don't know. But we'll think about it. I would do NBC. I'd do Fox, too. I'd do Fox, too. But right now we have to determine whether or not we even want to do.
Well, the numbers in round 1 were absolutely massive. Tuesday's debate pulling in a huge audience of more than 67 million viewers, topping the turnout for Trump's debate with Biden in June by over 30%. Early polls showing voters picking Harris as the clear winner, with both candidates yet to agree on a rematch. Bloomberg's Mike Shepard joins us now for more. Shep, walk us through the path forward from here. The next 2 months of campaigning, do we get another debate?
Well, it's a great question, John, and I think we're looking forward to seeing how this gets answered, because the debate on Tuesday night really answered a lot of questions about how the two candidates would comport themselves against one another and what we would see from Kamala Harris in particular. She used the stage on Tuesday night to take a more prosecutorial approach toward Trump, using his own words as president, his own actions as president, and everything he's done since leaving office to try to undermine him as an opponent and candidate. Trump, on the other hand, came in less prepared, and he was on the defensive for most of the debate, and that made it hard for him to do the main thing he had to do on Tuesday, and that was define Harris and really hang more of the Biden administration policy failures on her. And so for Trump to decide to do another debate, he has to take a very different approach going into it if that were to happen.
Shep, let's talk about the rest of the 48 hours. We know Kamala Harris is going to North Carolina. Democrats really view North Carolina potentially in play this year. But Trump's going to California. I understand why he's going there for fundraising, but why is he giving a press conference in a very blue state?
Well, Trump is looking for any sort of media that he can get at this point to make up for some of the struggles that he had on Tuesday before an audience of 67 million people. And he will do that. He would do that news conference in New York just as well. He will also be using that West Coast swing, Emory, to visit Arizona and Nevada, which are two critical states. So he'll be out there looking for money, looking for that attention from the public from a wider stage, and then also visiting these swing states. But keep in mind, these news conferences that the former president has given, especially since leaving office, have not yielded the same kind of viewership and results that he did, for example, at the beginning of his term as president.
Have we seen any impact yet, Shep, as well, of the Taylor Swift endorsement?
Well, so far, what we have noticed is that the vote.gov website, which is an official federal government platform that directs voters to voter registration links in all 50 states, there was, from the link on her Instagram post endorsing Kamala Harris, more than 300,000 queries to vote.gov. That doesn't mean people register, but it does signal the interest that voters, that Swifties, she sent this out to 283 million followers on Instagram. And we do know that Taylor Swift has an enthusiastic following. It skews young. But remember, even the kids who may be going to these concerts, even if some of them might not be old enough to vote, they have parents who take them to those concerts and who are bought into, the Taylor Swift machine. And also this signals that there may be some organizational might behind it too, because the Swift movement also has lots of clubs, and the kids and fans really talk to each other and communicate to each other. And it's also a voting demographic that both Republicans and Democrats in particular are looking for.
I think Mike's suggesting the kids are about to bully the parents. Mike Shepard, thank you. On the Swift effect in the big race and the campaigning over the next 2 months, 67 million. That's a ton. The most watched debate ever, these are the numbers. 84 million. The first one between Trump and Hillary Clinton back in 2016. That was pay-per-view, real box office.
Yeah, this was pretty close. And what's interesting to me is that this was actually, I think, 30% more than people who watched Biden versus Trump, although in the sort of repeated versions, maybe the numbers climbed quite a bit.
Yeah. Let's just say people are more interested now than perhaps they were a few months ago. Equity futures right now on the S&P positive by 0.1%. Coming up on this program, we'll catch up with Javier Blas with Brent crude trading around $70 a barrel from New York. This is Bloomberg.
think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're gonna get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Three-day winning streak on the S&P 500. Equities positive by 0.1% this morning. Looking to make it day 4 on the Nasdaq up by, let's call it a 0.1%. The Nasdaq 100 having its best day since mid-August in yesterday's session. Nvidia helping the day with the best day since July on a single name that posted a gain of more than $200 billion US. Phenomenal.
Because ultimately, people are getting emotional over the deliveries of chips. They are very tense about making sure that they get in the right number. This was at a Goldman Sachs conference out west yesterday. The NVIDIA CEO was talking about the emotionalness of getting deliveries. It just points to sort of, I don't want to say the sort of random increase or decrease in stock prices, but it feels like it doesn't take much for stocks to really surge or fall dramatically on pretty massive names.
He has Chairman Powell-like power over financial markets. Well, I don't think that's an over-exaggeration. He really does. He can come out and speak and the whole thing turns around, and we saw that in yesterday's session. Let's turn to the bond market. Yesterday, the 10-year posting a gain on a yield for the first time in September, but that gain in the end, at the end of the session, Lisa, only up by a single basis point, and the range up from anywhere from 4 and down from anywhere from 4, and the 2-year range was all over the place as well. Mohamed Al-Erian's going to join us in 30 minutes' time, and he's got a lot to say about the intraday volatility in the bond market.
Does it create greater degree of fragility in the financial market at a time where even the benchmark rate is so uncertain? Yesterday, there was a round-trip feeling, a question around how much the Fed could cut, how much they were willing to cut, and then also how much demand there was on the other side for longer-term bonds. The fact that the auctions have gone off so well this week really highlights that maybe the mood has shifted and people think inflation truly is a fight that is already over, and they are willing to go in U.S. debt in a way that they were not just a couple months ago.
There's just a massive bias to buy. It's something that Ian Lingen of BMO has repeated over the last month or so. Ian Lingen writing just yesterday, going into jobless claims. I think these numbers will be of interest to many of you. The number of weekly filers for unemployment benefits has stabilized recently, with the 4-week moving average down to 230K and the lowest since the beginning of the summer. Things have really stabilized in the labor market on that very specific data point over the last few months.
Which is the reason why people have reduced some of the emphasis on it. A key question, though, and we keep repeating this, and not to be talking conspiracy theories, but some people are wondering about the response rates of these. The response rates to these surveys have gone down dramatically since the pandemic. How accurate can they be at a time when people are hinged on every data point to understand the trajectory of the economy over a longer term? It's sort of the reason why people aren't completely complacent out there.
Jobless claims should be giving you a pretty clean read on things. That number comes out in 2 hours' time together with PPI. The other thing that comes out a little bit later this morning at 8:15 Eastern time, an ECB rate decision. So let's check out the euro. The scores look like this against the dollar. 110.19, positive by 0.1%. Some headlines coming from Morgan Stanley in the last few days suggesting that we could get down back towards parity. Now, we are all but guaranteed a 25 basis point rate cut later on, according to many of the estimates on the street from the ECB. We've been asking a question, given the growth backdrop, the profile at the moment. Why are we having a conversation about 50 in America and not having that conversation in Europe, in Frankfurt, Germany?
And you identified it. How much is this because it is a single mandate central bank where they're focused completely on inflation versus a dual mandate of the Federal Reserve where they're also focused on the labor market? And how much is it just institutional disagreement and the sense that you're not getting all countries agreeing in Europe on exactly what the trajectory should be? That said, a lot of people are really curious to see if the ECB puts out something that indicates that they're ready to go faster, and maybe consecutive meetings starting as soon as now, at a time when a lot of people are saying disinflation and deflation is a bigger risk again.
Looking for some fresh guidance from President Lagarde later on this morning. That news conference at 8:45 Eastern time, and looking for some new forecasts a little bit later on this morning as well. Euro dollar 110.18. Under surveillance, NVIDIA CEO Jensen Huang saying the scramble for a limited amount of supply of chips has frustrated some customers and raised tensions. His comments coming as NVIDIA leads a tech-fueled rebound in global equities. NVIDIA's up again this morning by 0.6%.
Yeah, it makes me feel a little bit unclear on how much some of these massive stocks can really move on what. What did we learn? We've known this. We've known that there's been a real huge demand for some of these chips. This isn't news. Why should the shares be up more than 13% so far this week? Is this just a buy the dip moment? And the more that there is a buy the dip moment, how much conviction can we have that those longs haven't been washed out and that we haven't seen a real reset in some of these equity markets?
I hate to be the Debbie Downer on NVIDIA, but he was also asked about the geopolitical concerns. They are so heavily relied on these chips that, yes, they make and design themselves, but they're manufactured by TSMC. There's no risk when you look at this stock that people are really trying to weigh in some of these geopolitical concerns. At the same time, the Financial Times this morning, front page, talking about SEALs Team 6.
Yep.
For over a year, has been training on how they could help Taiwan if there was a Chinese invasion. So I just don't think any of that's reflected in the stock price.
So there are multiple dimensions to that line. That is one. Here's another. The market ran with the idea that this was all about demand, things are great, buy the stock. I wonder how much of that was a nod towards some of the regulatory problems that are starting to come to the surface around how some of these chips are being supplied to certain customers, and whether actually he was giving us a little bit of insight into the relationship with customers and maybe some of the complaints that are being made at the regulatory level down in Washington, D.C.
The sense that maybe they're worried that they're actually not going to be allowed to sell some of the chips or provide them, and this sort of concern about getting it ahead of some of the regulatory changes to make sure that that's the case. Look, they're going to be in the crosshairs, but the bottom line is the fact that the demand is so strong, it means that it's going to be hard for them to just
You
fall
remember
off the
some
map.
of the allegations against the company, but they were giving preferential treatment to some companies, telling some companies that if they didn't deal just with them and dealt with other people, they couldn't have the chips from them. I just wonder whether that's a point of tension overall. When he's talking about the relationship, what are we really talking about here? Is there something else going on?
Or is he basically saying to regulators, hey, people want our chips so badly, we don't have to play those games. And they're just so desperate to get them that, you know, these are the conversations that we have. Either way, people just said buy the stock.
It's a nod to everyone. And then they bought the stock. So Lisa's right. Let's turn to VW. Volkswagen chairman urging the European Union to alter its emissions targets and provide clarity to the car industry. His comments coming as the company makes a big cost-cutting push, scrapping job projections for auto workers in Germany after last week warning it may have to shut plants there for the first time in the company's 87-year history. Mario Draghi, on this ECB day, the former ECB president earlier this week, warning the Europeans that their own regulations are killing European companies.
Well, what was fascinating here is this line that I think we have been talking about literally for months. The Germans, it feels like they're waking up to. Politicians have given the industry targets without the necessary infrastructure being available and without considering whether customers are along for the ride. The demand is not there, but the policymakers basically have told them, you have no choice, you have to get there.
How many times have we said America innovates, China replicates, and Europe regulates? Clearly, Mario Draghi wants to do something about that.
Yeah, although does he have any cooperation from Germany? And that's going to be the key question. I mean, again, it's sort of the curse of being a multifaceted region that has a number of independent governments.
That's the latest on VW. Here's the latest on space. Look out for some pretty stellar pictures coming in the next couple of minutes or so. A SpaceX crew of 4 astronauts making history this morning, getting ready to perform the first commercial spacewalk as part of the Polaris Dawn mission. The entire process for the extravehicular activity taking about 2 hours. Crew members Jared Isaacman and Sarah Gillis will exit the Crew Dragon capsule sequentially for about 15 to 20 minutes each. That's set to commence in the next 2 minutes or so.
Yeah, well, I can just say I went down a rabbit hole this morning. $12 million on average for a spacesuit from NASA.
Is that how much?
That's how much it is. $3.5 billion to include all-inclusive with the maintenance, et cetera. So this is a private venture. I'm curious about the scientific aspect of this. There is none. But there is a sense of, does this really pave the way to potentially more commercial exploration, or even, frankly, SpaceX showing that it can rival NASA at a time when there's real questions about the ability for the U.S. to continue to support NASA.
When that walk begins, we'll bring some of those pictures to you, so look out for that in the next 5-10 minutes or so. Elsewhere, the IEA saying in its monthly report that global oil demand growth is slowing sharply as China's economy continues to cool, pushing prices to a 3-year low. World consumption increased by 800,000 barrels a day in the first half of the year, the lowest rate since oil demand crashed during the 2020 pandemic. Following this closely, a good friend of ours, one of the very best, Javier Blas of Bloomberg Opinion. Javier, wonderful to catch up with you, sir. A big takeaway for us on crude in the last few days is just how bearish things have become and how quickly things have become bearish. Javier, what's behind the bearish noise that we hear from the sell side and the buy side alike in the last few days?
Well, I think that there are a number of elements. One is certainly that demand for oil is slowing down. But I think that the more structural question has been that OPEC Plus, Saudi Arabia, have kept oil prices too high for too long, incentivizing every rival. Production from the United States, Canada, Brazil, Guyana is booming, and that's overwhelming the market, and it's going to continue overwhelming the market in 2025, just at a time where many of the OPEC Plus members want to produce more. That's what is creating the big risk of a glut in 2025 that has driven prices sharply down.
I was struck by the IEA report, not in the fact that it had a pretty bearish tone to it, but the why behind it. And Anne-Marie mentioned this earlier. It was in part because of uptick in EV adoption, as well as just what they see as a peak in oil demand coming very soon. How much, Javier, is this bearish in the overall macroeconomic outlook versus a structural shift in the crude market?
I think that the main driver right now is the structural shift in the Chinese economy from industrialization to more service. And then the other is a cyclical factor, is that the global economy is slowing down. Everyone that we look, from the United States to Germany to China to Japan, things are pointing down for 2025. Are EVs playing a role? For sure, on the margins, but I will point out that the International Energy Agency said a few months ago, a few years ago, that the global gasoline demand, which is what is really affected by electric vehicles, have peaked in 2019. Since then, I have to say that actually, no, it was growing in 2023, has revised the numbers, and is actually projecting even a higher number of higher demand for gasoline for 2024 and 2025. So yes, EVs are playing a role, but the biggest factor is the structural change in the Chinese economy, with lower industrialization or less role for the industrial side, the manufacturing side, more the service side, and then the cyclical slowdown in across the world, notably in Europe.
Javier, this structural change in China has been going on for the better part of a year, 2 years, even 3 years. Why now is it suddenly affecting the supply-demand dynamic in a much more aggressive and visible way?
Well, I think that the main reason is we have to look at the supply side. When you keep oil prices close to $100 for 2.5 years, at some point that supply side catches up, overwhelms the market, and that's where you get the glut. Yes, the demand is slowing down in China, but if we didn't have that extra supply coming from the United States, from Canada, from Brazil, from other parts of the world, that would not be a major problem.
So Javier, how does OPEC Plus basically fight the Permian?
Well, there are only two ways that OPEC can react to the current situation. Either they accept that prices need to go down, and they just accept that new reality and slow down shale over time with perhaps $60 to $70, and they are prepared for that, which I think is unlikely, or they have to declare a new price war against shale. OPEC has fought 2 price wars over the last 10 years, and to say that a third time is not possible, I think it will be ridiculous. I think that we need to plan for the potential that OPEC decides to flood the market again.
Well, after the last price war, I spoke with Prince Abdulaziz and asked him about the nasty divorce he was headed to with some of his OPEC members. They try to talk nice, Javier, in public, but behind the scenes, there's Always a lot of issues that unnerve all of the members. Where's the group right now in terms of what they envision for 2025?
I think that the group is really split. Saudi Arabia will like that OPEC restrains production and everyone else restrains production. But when you look at the numbers for production, when you start counting the number of tankers leaving OPEC countries, you see that Iraq is cheating, Kazakhstan is cheating, the United Arab Emirates is cheating, probably one of the biggest cheaters of all. So the Saudis are restraining production while every other member of the organization under quotas is overproducing well above those production levels. And then there are a number of OPEC plus countries that they are not under production limits for a number of reasons, particularly because they are under sanctions, American sanctions, that they are also increasing production, notably Venezuela and Iran. Iranian production hit the highest in 5.5 years, and that is also overwhelming the market.
Hey, Javier, appreciate the update, sir. Thank you. Some big moves in the last few weeks in the crude market. Javier Blas there of Bloomberg Opinion. Let's take the opportunity to get you an update on stories elsewhere this morning with your Bloomberg brief. Here's Danny Berger. Hey, Danny.
Hey, John. Japanese Foreign Minister Yoko Yamakawa has declared her bid to become the country's first female prime minister. She promised to strengthen price relief measures and boost real wages. Kamikawa is the 9th lawmaker and the 2nd female candidate to make a formal run for the ruling party's September 27th leadership vote. Campaigning is set to start today. I want to bring us some live pictures. SpaceX is conducting the first ever commercial spacewalk. So as of about 30 minutes ago, oxygen began flowing into the crew's spacesuits. What you are seeing now is billionaire Jarek Eisenman start to undo the hatch. The cabin is fully depressurized. He will go out onto a tether for about 15-20 minutes to conduct the spacewalk, and then SpaceX engineer Sarah Gillis will follow and exit the Crew Dragon for a similar spacewalk. Now, there's no airlock aboard this cabin, so what they've done up to this point is let all of the air, all the oxygen out of the entire spacecraft, turning the whole thing into an airlock. And then, as you can see, they are starting to open the hatch. But in the meantime, all 4 crew members must wear the new suits, again, because this entire cabin has to act as an airlock. So you can see on the bottom left corner, that is the PSI. In other words, the pressurized cabin, it is at 0, which means that Jared Isaacman, again, the one you see with his hand on the latch, is able to start this. Now, it's not an easy latch to open. It does take a few different processes. You might see Sarah Ellis, who is underneath him at this moment, one of the lead engineers on SpaceX, lend her hand at it as well. So that's exactly what we were waiting for now. 32 minutes in, technically, to the spacewalk. Again, it starts officially when oxygen starts flowing into their suits. So at the moment, John, we are just simply waiting for Jarek Isaacman to fully open the hatch. You can see the tether there. He will exit and begin the descent into space.
Danny, I've got no idea how long this process takes, but given that he's just sitting there holding the lid, I'm just waiting for this to happen now. I can't leave these pictures, Bramo.
Well, I mean, honestly, it's really compelling. I'm just sitting here kind of trying to push it up for him or pull it down, whatever happens. You know, there's a real concern here, particularly because they're pretty far away from Earth. They're actually further away from Earth than usual, that they could be susceptible to some sort of solar flare. So they're actually watching the sun very closely because of the radiation exposure. It is, you know, I imagine nerve-wracking if you're sitting there about to go where men have gone before, but not very often, and that potentially could be a lot of problems.
Danny, we've seen a lot of developments on this front over the last few years. Some people have called it a billionaire vanity project. Others have talked about it in greater detail about how it can advance civilization. What is this morning?
This, plain and simple, John, is just testing out these spacesuits. That's really what we're seeing. These are new spacesuits, and again, as I mentioned, the entire crew needs to wear them because there is no oxygen currently on board at all. So I guess in some ways it's SpaceX showing, look, we can develop privately these spacesuits, which are so expensive to put together, which NASA has spent so much time doing. So not even just sort of the scientific advancement, it's SpaceX being able to flex that we can do this too. And you can see there, we're starting to get some more movement onto the hatch. As I explained, this is a really slow process. It's not necessarily easy to open this thing, and they're being very careful with it. But it is new tech just from a private standpoint, John, that they are wearing these suits.
Right now, I'm actually doing research, and I thought that it was interesting. The way that these suits were designed was in part by Elon Musk himself, and also by someone who has worked with Hollywood to actually design some of the sci-fi aspects of this. How much is this a sort of design aspect, and how much is this actually SpaceX trying to, Danny, rival what NASA is capable of, given the sort of complex, the military and industrial complex behind it, that a lot of people are wondering whether there is the incentive to continue to fund it in the years ahead?
There's definitely an element of both, Lisa, and especially with spacesuits, there had been criticism that they weren't advancing fast enough. Even things like just making spacesuits that can fit women's bodies versus women having to adapt to the spacesuits that are there. But it is a work in tandem. It is SpaceX and NASA together establishing these missions. For example, when you had the rocket separation after the initial takeoff and come back onto the launch pad, part of the reason they had to do it the timing they did is because that very same SpaceX launch pad is getting ready for a NASA mission. So yes, we can say, look, this is SpaceX saying we can do this thing. It's not just you, but it is very clear that it is not SpaceX going at it alone. They are working hand in hand with NASA. But again, in doing a mission like this, the scientific research behind it that they're trying to accomplish is testing these spacesuits and testing spacesuits privately for SpaceX. It's not some sort of bigger, grand NASA type mission. By the way, you're just looking at the control center now there as they get closer to doing this spacewalk.
Yeah, Danny, you're saying how long this actually takes, but how much time will they have outside this capsule in space?
So Jarek Isaacman, again, the billionaire who largely funded this project, will be out there for about 15 to 20 minutes. He then comes back. Then Sarah Ellis, the lead engineer on this mission, will do the same thing. And then the other two people on this mission will stay in the aircraft. Again, I just find this almost heart-wrenching for them because they can't go on the spacewalk, but they have to do all the things that set up for it because there's no oxygen on board. So they are also wearing the spacesuits. So the whole process, maybe from here, we're about 40 minutes in, will take another 30, 40 so minutes as they go out onto that tether.
So Danny, I think we have to do the compare and contrast. If we sit on what's happening right now with a SpaceX capsule and compare it to what's been happening with Boeing and their efforts in space, there are two astronauts stranded in space right now who are meant to be there for days, but will end up being there for months and won't be back until February. Why is SpaceX doing apparently, seemingly, such a much better job on this front than, say, Boeing?
Well, I mean, even just looking at this mission itself, it's going further in space, but also the mission is somewhat different. This thing is just not very long. It's only a couple days, and they didn't bring extra fuel supplies with them. I mean, they're not even prepared for being stuck out in space. Whereas the Boeing trip, not only was it supposed to be 10 days, but it's been extended multiple months. There really is no sort of bandwidth for them to be longer. By the way, I do hear cheering in the control room there. So it does seem like maybe the hatch is open. They're going out. We're not actually seeing the hatch at the moment. There you go. There you can see the hatch is now open. So Jarek Isaacman should be shortly exiting the spacecraft at this moment. But John, you're completely right. SpaceX has been able to more successfully do it, and maybe it has something to do with the private backing. The fact that they are taking a billionaire with them who has funded this, and the money behind SpaceX versus Boeing, which is a complicated beast and has so many other aspects that they need to pay attention to, where again they can fly a billionaire who we are about to see exit a spacecraft.
And Danny, we are hearing, as we can see right here, the hatch is open, and this marks the first time that these 4 humans are simultaneously exposed to the vacuum of space before they go out. It does raise this question, Danny, about what the ultimate goal is. How much is this going to be a commercially focused, commercially driven type of enterprise versus basically SpaceX rivaling some of the state-funded space programs to go out?
Yeah, I mean, look, if you could not only sell a seat for people to just experience weightlessness, because that's before what we've seen in sort of the commercial aspects, as we look through the very lens of Isaacman as he exits the spacecraft. Before, what you could essentially sell is you go out into space, you go just above the surface, you don't get anywhere near where the moon is, and you can experience weightlessness. What SpaceX is offering here is something very different. They are offering a potential commercial viability to do spacewalks. I mean, that is another level of space tourism. And I think part of what they're selling